Well, thanks for joining us today.
Oh, what? Mic check.
All right. Thanks for joining us today. Hopefully, this is a action-packed day here. Our first inaugural business workshop. I'm just going to start us off with some basics. I don't know where everybody is in their Bitcoin journey. If they just learned about it, they know nothing. They're an expert. If anybody tells you they know everything about Bitcoin, they're probably lying, including myself. So I'm just going to do my best up here and give it a shot. So the history of money as throughout time for thousands and thousands of years, we've tried all sorts of things: trade and barter, commodities, paper, stones, metal, debt. We're all over the place. But attributes of money can start at a very simple position, which is, you need something that's measurable, divisible, and durable. So let's give it a shot. Our first one, let's take wood. Wood's pretty measurable, right? You've got a 2x4. You can divide it pretty easily, right? You can slice it up in very equal parts, and it's decently durable, right? If you leave it in a safe, it's hopefully not going to rot. It might rot after 50, 100 years, whatever it is. But unfortunately, it's not scarce, right? Anybody can grow trees and cut wood and create money. So wood's not going to work. So now we need to find something scarce that also has these attributes. So why not diamonds, right? They're measurable, they're divisible. You can cut them up and weigh them. They're pretty durable. They're also very scarce. But an issue, like you can see in this picture, they're not very fungible. So there's different sizes, different shapes, different carats. So you can't really trade them one-to-one as much as you'd like. So to fix this problem, we found gold. Gold has been a money throughout time, thousands of years. It was a great money. It worked fine. We had, the Renaissance. We had hundreds of years of technological innovations while we were on the gold standard. Unfortunately, gold in today's society and world is not global. It's not digital friendly. So with globalization, with technology, gold's just not going to work because the portability of it is tough. You've got to send tankers from country to country. The verifiability of it is hard because, you can't verify that a country or a person or a bank says they have as much gold as they do, which is why in 1971, France sent over a Navy ship to Manhattan trying to get gold out of the New York Fed. They didn't trust Nixon. I wouldn't either. So to solve that, in 1971, Nixon took us off the gold standard and said, hey, the dollar's in charge and we're backed by ourselves, which is paper. Paper's worked decently well. I think, for the first 10 years, sure, maybe it was good. It was easy to transact. We added credit cards, debit cards, the banking system. But one problem within the fiat system, which I hear a lot when we talk about Bitcoin, is like, well, I don't even get it. I don't understand it. And my rebuttal to that usually is, well, I know you don't understand the fiat system either because you just use it. And when you use it, it works, and that's fine. You don't need to understand it, right? What you're seeing here is a ton of lines, lots of nonsense. Banks, assets, liabilities, offshore, onshore, whatever it is, this is basically how our money works. And within all of those little lines enters in the leeches in society, the pocket grabbers, the guys that want to take a percentage here, a percentage there, or they want to add censorship or permission. And, we only work Monday through Friday. Sorry, your wire transfer is going to happen on Monday. Tough luck. Over the last couple of years, we've seen censorship and permission ramp up. Here's a few examples, right? We've got the Canadian Freedom Convoy, right, where they started freezing people's bank accounts just because they donated to a mission or a foundation, not really a foundation, but a protest, really. And that's crazy, right? Just because you're supporting some sort of freedom-moving organization, whether political or not, the fact that your bank can just cut you off at any moment should be alarming to many people. The other thing, when it comes to censorship, I know PayPal, I think they ended up walking this back, but they were going to charge people $2,500 if they added some sort of hate speech or things that they didn't like. Here it says sending, posting any messages, content that are objectionable or otherwise unfit for publication. So that's pretty crazy. Basically, it's very broad. It's very, yeah, I guess it's just broad, saying, hey, if we don't like what you're saying, we're going to cut you off and your transaction's not going to get through. So another problem within fiat, we get the next one, is the fractional reserve banking. Many people understand it, some people don't, but basically this is how our paper money, which used to be cash, quickly turned into debt tokens, just digital debt tokens in all of our bank accounts. Where you've got one, person A puts $1,000 in the bank, they have a 10% reserve requirement. So that means they can loan out $900 on top of your $1,000. So as you see that, it compounds quickly, and that $2,710 quickly has your reserve of $81, you've loaned out already $729, and that compounds obviously into billions and billions and billions and trillions actually nowadays. Next slide. Another big problem within fiat is counterparty risk, right? If you imagine yourself as this is your bank account, this nice guy on the stick, bouncing on the string, you're going through life day to day, check to check, you're enjoying it, and this hand over here is your bank holding your bank account and your savings. Unfortunately, if this bank gets an itch on their arm or somebody tickles them, they're going to drop this string and your savings is going to be pretty much wiped out. Another problem on top of counterparty risk is human corruptibility. As you can see here on this beautiful chart, not really. What's up? Graph. We get into hyperinflation or just inflation in general. We've seen it on a smaller scale here. I mean, not really small, 8% still pretty high, but you can see what happens and how quickly it can happen to a country like Zimbabwe, or all of these historical examples from 1945 through the early 90s. We've got big countries on here: China, Germany, Taiwan, Russia. These countries, it doesn't just happen in third world countries. It can happen to large countries. Even today, we've got inflation rates that are through the roof. This is a current snapshot of inflation. I don't know if anybody's noticed from watching the news, but Argentina won the World Cup this year, but also has 100% inflation, which is insane. And a fun fact, actually 2 weeks ago, I think, Argentina, in the Argentinian exchanges, Bitcoin hit all-time highs, which is pretty cool. So that's, I think they've got 30 million people, or 30 million, something like that, people in their country that, their eyes can't unsee what now they've seen, which is my government failed me, our money collapsed, but all while this was happening, Bitcoin was like this lifeboat for them, which I think is pretty sweet. Bringing it back to America, you can see this awesome chart, which was one of my favorites. It's called the M1 money supply. You notice that it doesn't get into 2023 on this side because they quickly discontinued this chart during the COVID run-up, because you can see it's a straight line up. This might be small. This is billions of dollars. So 4 trillion was what our global, our national M1 money supply, and it quickly ramped up to 20 trillion in a very short amount of time. That is going to cause us lots of problems, some of which we're already seeing today, some are still coming. And over a long term, you can see at the top our purchasing power and currency and circulation. So it's a dumbed down version of what you're seeing below, but you can see the dollar, in 71, when we were on the gold standard, was $1. But now that same dollar is basically a fraction of what it used to be, which is why home prices are through the roof, food's through the roof, you name it, right? Gas, everything. So the problem with fiat is human corruptibility. It leaves people in charge at the top that make all these decisions, many of which you have no vote in, which goes completely against democracy, if you will, if that's the word. So enter Bitcoin. Bitcoin is all of these wonderful attributes: money and it finally solved the problem of human corruptibility, right? It is a software network that's global, that cannot be changed. It can be, but very, very difficult to change. And it's a system of rules with no rulers. So I'm going to run through all these. So Bitcoin on the measurable and visible side, then, when you divide a Bitcoin, you've got one Bitcoin is divided into 100 million Satoshis. So that is the same, not the same, but similar to cents to a dollar. So you can divide it up, and many of us that live on a Bitcoin standard or want to live on a Bitcoin standard, we price things in Satoshis because it's easy. The next thing is the durability of the network. Here, this is a screenshot from yesterday. Our Bitcoin uptime, which is the network itself, has a 99.988% uptime, and the only time it's been off, or the last time it's been off, was over 10 years ago, and it was only off, even in that year, it still had 99.9% uptime. So with a system like this, over the last 10 years, it's had 100% uptime. Every transaction goes through, and it's a reliable, durable network. On top of that, your money itself is durable. This is a challenging chart to look at, and we can dive into more details when we talk about holding your own keys and things like that. To break this down simply, BIP39 is a system that is used to help easily secure your funds, and it uses a list of I think it's 2,046 words that all can be used in conjunction, either into a 12-word seed phrase or a 24-word seed phrase. And you can tell, based on all the different options that are available and all the possible outcomes in that within those words, you end up with there's less atoms in the universe than there are outcomes for your Bitcoin seed. So it can't be hacked with a computer or even AI or anything like that. Doesn't exist. And it's called SHA-256, and I believe the FBI created it a long time ago, or the NSA, to protect the American documents. But it's a software, it's a cryptography to help protect your keys and protect your money. To get into the scarcity, which is, I think, one of the most beautiful things about Bitcoin, here's a chart on this side. I'm going to try to get away. Every 210,000 blocks, roughly every 4 years, there's something called a halvening in Bitcoin. And that halvening basically cuts the outstanding supply in half. So as you can see early on, in 2000, early Bitcoin, there was lots of Bitcoin coming into the market because that's when the block reward was up at 50. They had to get the system going, but every 4 years it cuts in half, cuts in half, cuts in half. And I think the very last piece of the Bitcoin, the very last Satoshi, will be mined in somewhere around the year 2140. So most of us in this room will probably be dead by then. But that's the scarcity of the network. And if you really think deeply about it, Bitcoin in the universe is the only fixed asset that exists, which is pretty incredible because there's always going to be more gold. Who knows? Elon might start mining gold off of asteroids or something, right? It's pretty cool that something as simple as a software system can be the only fixed asset that exists in the entire universe. The next thing is fungibility. Bitcoin is 1-to-1. It's pretty fungible. Similar to the dollar, there may be some fungibility issues in the future where maybe, hey, this rare $2 bill, somebody might want it more, but it's still a $2 bill or it's still a $1 bill. But ultimately, Bitcoin's fungibility is 1-to-1. A Bitcoin is a Bitcoin, and that's what it is. The portability of it, obviously, is another factor, which is huge. Relating it back to gold or even cash, if you're going to flee a country for, a tyranny that's taken over, whether you're in a third world country or who knows, God forbid here, but there's easy ways to move this money, much easier than a briefcase full of gold or cash that can be taken from you. Here we've got a few examples, right, where we've got a cold card, which is just a simple hardware wallet that you can back up your keys and use that to send funds. tiny, little, simple. Obviously, your phone, it makes it much more portable. You can have all the money at your fingertips to send, transact. And then back to the words, ultimately you can use the brain wallet, which is memorizing these 24 words or securing them in a safe or burying it in your backyard, or who knows, you might want to go scuba dive out into the bay here and bury treasure. That's up to you. But we'll talk about that in some other discussions up here today. But, so that's portability. The verifiability is also important, right? With verifying, bringing it back to that gold, you can't verify if somebody's got, 100,000, pounds of gold or zero. You're kind of just taking their word for it. So nowadays, or not nowadays, but within Bitcoin, you've got the secure cryptographically verified network that is signed. Basically, you sign transactions with that private key. And with that, it can't be corrupted. It's a software system, it's a protocol that when you use Bitcoin, you adopt into Bitcoin. So that's a verifiable network that can't really be stopped. And one of my favorites, obviously, is the human corruptibility, which is why most of us are here today. I created this awesome meme, which is the Spider-Man. They're all pointing at each other, and basically, the reason Bitcoin solved the human corruptibility is through its protocol and through its system of updating that protocol. And basically, if you don't have all the developers, the miners, and the nodes all on board at the same time, then Bitcoin's not going to change. So somebody can't just come in and say, hey, we're going to change the block size, or we're going to increase supply because we think that's a good idea. They can do that, but it would be similar to playing baseball and then just deciding to run to third instead of first. They're just going to throw it to first and you're going to be out, and that's too bad. So unless everybody agrees that we're going to run to third, that's not how the game's played. So after that, I'm just going to leave us with this, which I think is kind of a powerful quote that I found. It says, absolute mathematical scarcity achieved by consensus in a sufficiently decentralized distributed network was a discovery rather than an invention. It cannot be achieved again by a network made up of participants aware of this discovery, since the very thing discovered was resistance to replicability itself. I think that's pretty powerful, right? There can't be another Bitcoin. There's never going to be another Bitcoin because we are Bitcoin and we're not going anywhere. So I'll open up for some Q&As. I'll try to answer some questions, but I'll leave some questions maybe unanswered depending on if we're going to cover them later or not. So thanks.
We've got about 8 minutes for questions. So raise your hand if you've got a question about money. I'm sure someone got one.
I'll pass the mic around.
Anybody? Oh, here we go.
So something you hear a lot about.
Oh, wait, he's got the mic for you.
So something you hear a lot about is people saying that you have to spend your Bitcoin, you don't want to just hold it. And so people here in the US obviously are not incentivized to do so because if they got in early, they're going to have taxable, I guess, issues, and the newer people will not have to track all that from the early days. How do you talk to someone about still living on a Bitcoin standard, but still living in the fiat system?
Right. I like to say that we're entering a magenta world, but really sometimes it looks brown because we've got the green dollar system that's slowly blending into this orange system. So yeah, you're right. It's a challenge, right? You got to live in both worlds, especially being this early, which all of us in here are still very early. It's a challenge, and I think the analogy that I like to use with that is, if everybody back in, when the internet first launched, if they said, all right, we're all just going to go buy domain names and we're just going to hold them, and nobody's going to invest in internet companies and nobody really cares about the network of how the internet works, we're just going to buy domain names because we think they're scarce and it's a good asset to hold. Well, fast forward 25 years, those domain names really wouldn't be worth much because there's no, abundant internet network that needs it. So to answer that question, I think moving forward, what we like to say is it's not don't hodl your Bitcoin and don't, save, but it's use Bitcoin for its intended purposes. On the very top of the Bitcoin white paper, it says peer-to-peer cash system, right? Digital cash system. So that's what we believe here in Bitcoin Bay is, being not reluctant to use it, being open to use it, and learning the tools to say, okay, I'm going to go to my mechanic and pay him in Bitcoin because I appreciate his services and I'm happy to do so, right? You can spend it and just go back and replace it. You can buy it again. It's not the end of the world. Obviously, there's tax implications and things like that, which I know some of us will cover later, but that's, I guess, my 2 cents on it.
We do have a tax expert in the room with us who's going to be talking about taxes.
And
we are not tax experts.
Right.
None of this is financial advice. None of this is legal advice.
Or legal.
Yeah.
Thank you.
Thanks. Anyone else? No? Okay, check. Oh, Trey's got one.
What do you think could go wrong with Bitcoin? Like, what are the biggest threats to it?
So one of the biggest threats that I see, this question I think can be answered 100 different ways, depending on who you talk to. But one of the biggest threats that I see is what I like to call, paper Bitcoin, if you will, which is if you buy Bitcoin on an exchange and you leave it on exchange, or you leave the custody of that actual asset in somebody else's hands because you think it's convenient or you think it's convenient, that is going to cause a large problem, one of which we saw already last year with FTX. And when they were selling Bitcoin, but not actually giving out keys, and people weren't withdrawing that Bitcoin, so they weren't forced to take that coin and send it to the actual individual user, they were essentially increasing the supply because they were selling something that didn't exist under the pretense of Bitcoin. And I think ultimately when, or how this network takes, really hold of the financial industry is simplifying and helping people take custody of their coin, because as we're knowing, as we've seen and known over the last couple of years, especially, the trust in our networks are breaking down. So I think that's one of the biggest risks is what I like to call paper Bitcoin, which is, leaving the keys with somebody else, because then it's, their custody. It's the same thing as the counterparty risk with the guy on the string, right? It's the same system. If you've got your Bitcoin sitting on an exchange and that exchange goes under, well, you're tough out of luck. And that can go several different ways, but that's personally, I think my biggest, I guess threat to the network is paper Bitcoin, if you will.
How do you feel about regulation in that space with exchanges buying and being forced to proof of stake? I know that the spirit of Bitcoin is freedom from regulation, but we need something there because that is a great threat.
Yeah, and I wish we had a discussion today diving deeper into regulations, because obviously they're coming. But the proof of stake is a step, right? It's a step towards what we want to see, which is, okay, if you've got 1 million, Bitcoin, why don't you prove it, right? It's pretty simple to just sign messages and say, hey, this is our Bitcoin. But ultimately the problem isn't if they have the Bitcoin, it's okay, well, how many outstanding liabilities did you, bet against that Bitcoin? Which I don't know if that can ever be public information, right? Because then you have scenarios where your competition will try to undercut you and attack you from different ways. I don't know if we'll ever see that type of regulation, but thankfully Bitcoin is very easy to store and hold. And hopefully here in the future with more technological advances and companies growing, it'll be even easier to hold your own keys.
We got time for one more.
People say that Bitcoin is used for terrorism, bad entities use it. But how does the security and transparency of the chain really kind of counteract that argument?
I guess I would have a rebuttal to that says the dollar is used far more for illegal activities than Bitcoin. But even Bitcoin is not the best for that, right? Not, it's a public ledger, right? So if you're trying to hide or obfuscate what you're doing, there may be tools for that, obviously privacy focused, not so that you do illegal activities, but financial privacy is important for all, especially creditors, debtors, what have you. But no, I think people that are going to do bad things are going to do bad things, whether it's, Bitcoin, cash, trading goods, that's just how it is. Bitcoin by no means, incentivizes bad actors. I think it actually does the opposite with it being a public ledger. But yeah, I just think, bad guys are going to be bad guys, and Bitcoin just exists, right? It's just lines of code, right? It's a network that, if some people want to use it for that, unfortunately, we can't stop them, but, the FBI and, they can't stop people using cash in briefcases either. So it's not for me.
Again, not financial legal advice.
Yes, exactly.
But that's our what is money.
Awesome. Thank you.
Thank you. All right, so next we're gonna have Ben come up here, and we're gonna be joined by Michael Atwood of Oshi on screen. He is probably the king of onboarding businesses. I'm not sure if you can hear me yet, but Oshi is an app that's pretty much like, where can I spend Bitcoin near me? It answers that, and it onboards all of y'all. And what you can do is, if you're a restaurant or you're trying to clear some inventory, you put out a deal, hey, 20% sats back if you purchase your thing from us within the next 5 hours, because it's our happy hour. Okay. Nope. It is on mute. How do we stop that?
Okay, this might be difficult with the microphone on. But we're gonna figure it out.
Where is that coming from?
I think it's the microphone to this computer.
Yeah,
Sure, the mic. PC's speaking.
Yeah, no, it's
on.
you gotta mute you.
Yeah, it's muted.
No, you don't.
The computer's muted.
It is. There you go.
It's not.
Okay, just insanity check. All right. So we're here with, hey everybody, how are ya?
It stopped.
Okay, yeah, I think we're good. All right, thank you, Wes, and thank you, Fabio.
This is our first event that you guys are doing.
Gonna be some kinks, but we're going through it. Appreciate everybody coming out. My name's Ben Schroth. I'm an engineer at Block Spaces. We build lightning infrastructure and services for businesses to accept Bitcoin and onboarding, and that's the focus of our talk. I'm joined by Michael Atwood here, and if Michael, you want to say hello? No. Okay, Michael, we're having some trouble. Hold on. Okay. So this didn't work as well as planned over Zoom, but we've got his pretty face here for you all to see. So as Fabio came up and told a bunch of sweet, beautiful music of how Bitcoin is great money. And since this is a business workshop and we have some business owners here, you might be thinking now, hey, how can I start accepting that? So that's the focus of this talk. I'm gonna present some services, companies that offer Bitcoin services to be able to accept them. Now, Bitcoin has evolved a lot. Over the years, there have been a lot more services and companies that have come up. So my job here today, and as Michael will talk, well, maybe not, I'll speak for him, is to basically lay out a map for what this is, what you could accept and maybe what fits best for your business. So the services that I'm going to give, basically I put it into two categories. Custodial services and sovereign or non-custodial services. There's some trade-offs, as Fabio answered, with paper Bitcoin, having ownership, and really if you don't take ownership of your Bitcoin, you're missing some of those properties that make Bitcoin so great. So to get started, the first company that we're going to talk about is a Florida company based out of Miami, and that's called Ibex. IBEX, and what I'm starting with is these custodial services. So IBEX is a service that you can set up to accept Bitcoin. You basically get a POS that you're able to, you have the app on your phone, you have a dashboard so you can keep track of your invoices, your payments, what you're sending. What a differentiator of IBEX is and what makes it more attractive for people just getting into Bitcoin, just getting their toes wet a little bit, but want to accept Bitcoin, because there is a market for, when we go to businesses here in Tampa, even if they're unsure about Bitcoin or, maybe don't want to get into it, it's like, hey, we have a group of about 50 people that want to come in and spend their Bitcoin. At the end of the day, we just want to bring you more business. We want to help each other out. So what IBEX does, for those that may be uncomfortable, you can have something called a HODL ratio. And what that HODL ratio is you can connect to your bank, and for every purchase that you get in, let's say I want 30% Bitcoin and 70% fiat on every payment that I make. So, someone comes in, purchases a good or service from me, I can have instantly on every payment, say I sell $1, 30 cents goes to my Bitcoin wallet, 70 cents goes to my bank. So if you want to avoid, hodling your Bitcoin, again, a custodial service, it is up to you after that to take your money out to a hardware wallet or to a service like Unchained, who we'll be speaking later. So that's one of the first options is IBEX. Sure, yeah. We'll call them on Sunday morning or something. Okay, second, Strike. We know if you've been around the Bitcoin space for the last couple of years, Strike has made a lot of in the news, making a lot of announcements at Bitcoin Miami. So Strike really started as like a Venmo type service. So sending and receiving to friends all over Lightning. Oh, okay. So it started as like a Venmo type service to send and receive to your friends. You could also purchase Bitcoin and withdraw. And you could also direct deposit with Bitcoin. In the last year and a half, 2 years, they floated around that they're going to be opening up a commerce section of their services. So big thing that they announced was an integration with Clover. So Clover is a publicly traded POS system. So think like Square, Toast, and then Clover being that. So they will be directly integrated with Clover. So if I'm a business owner and I don't want to have, like you're a business owner and you don't want to have, say, a separate terminal or separate iPad sitting around and you just want to keep the one terminal, you can activate then with Strike to be able to accept Bitcoin. Another thing that makes Strike.
Are they getting the Bitcoin?
No, again, these are custodial services. And another thing that makes Strike attractive is they have like a synthetic stable to the US dollar. So basically, Jack Mallers, the CEO of it, calls it the magic peanut. We are just using the payment rail. So if I want to, if someone sends me Bitcoin, it can go all the way to my terminal, make a stop, turn to dollars, and you're shown a dollar balance, or if you want euros or whatever fiat currency you want. And then you could use that, any transaction on that is on those Bitcoin payment rails. And it's up to the person receiving to what they want to do with it. So Strike, it's in a beta test to sign up for it if someone is interested. I don't know if I doubt the Clover integration is turned on, but it's definitely attractive for people, again, that just want to dip their toes in. And also I'll have a link for anybody that wants to go explore these that is linked out to all of these, and I'll give that reference. Next on the list is Cash App. Cash App is the #1 finance app on the store or on the App Store. And when I say Cash App, I speak more to the umbrella of Block, which was previously Square. So Square, the largest payment terminal that is used by small merchants. If you see that little white square, the little white square or the terminal with the iPad screen, that's Square. So they have a large market dominance, and they're a Bitcoin only company. So this is with both of these, it's like, okay, this is like coming, but at the end, in what I'll explain later, or like with these applications, you don't need these services to accept Bitcoin. I can use any wallet that I have, as long as I know how much I'm charging them and I give them a Bitcoin address, I can receive Bitcoin. What these services mainly do is help with the accounting for Bitcoin and, keep it similar to, how you operate your business. So I put Cash App because it's down the pipeline, you can receive Bitcoin, and it'll be coming up. Next, OpenNode. OpenNode has been around for a long time. They were probably the first, Lightning payment processor, and first to really sign up. And what OpenNode does really well is integrations with other websites. So if I'm an e-commerce brand and maybe I don't have a brick and mortar, I can sign up for OpenNode and basically I can get a button. So, I have a button on my e-commerce website, I want to pay with Bitcoin, you click that and it will open a screen similar to this, like pay to this address as well. OpenNode's very good for e-commerce brands. If you're not the brick and mortar, having those terminals like a Square or with like IBEX or Clover. So that goes over the custodial services. Again, you don't own your Bitcoin. It's just numbers on your account. You don't own it until you withdraw it to your hardware wallet or whatever kind of storage solution you have. Or if you just have another wallet on your phone, get it out real quick. And going next, we're going into the non-custodial services or the sovereign services. So these are where you have full ownership of your stack. From when it is sent to you, it is yours. Nobody can take it. It's not a number on your screen. It is your money backed by your seed phrase, private key, however you do it, your own chain vault. So first is the most hardcore way to run your business with Bitcoin. And if you ask me, the recommended way to do it. Well, not custodial, I should say, not my recommended. Recommended is next. Voltage is a Lightning service provider. So what they do is they just give you a bare bones server for accepting Bitcoin. So you go in, plug in, they spin up a Lightning node, and what they run on the side is a BTC Pay server. So BTC Pay server is an open source software to be able to create a storefront. I use BTC Pay server for BitcoinBay.farm, our farmer rancher network. We're connected with ranchers and farmers to be able to purchase directly from people just down the road from us to get food. So Voltage with a Lightning node, it gets a little down the rabbit hole with Lightning, but it's full management. You have to run your channels. You have to keep track of liquidity. Again, it goes down the rabbit hole. And then also plug into the BTC Pay server. It keeps track of all the invoices and everything in one pane. But the most important part is you own your Bitcoin. Next is block spaces, Bitcoin invoicing and payments. So I'm a bit biased, but because I work for Block Spaces, and we have a few of our team members and founders in the back there, Gabe, Rosa, and Derek. So if anybody has any questions, come up to us, and have some time for Q&A after. So what we do at Block Spaces is we are a full service, fully managed Lightning service and on chain. But when you come to Block Spaces, come to our application, what we do is we'll spin up a node for you, non-custodially. You own the keys. We never see anything. We manage the channels for you, the complexities of Lightning, so you don't have to worry about it. And we want to make sure you can always receive payments. We want you to come in and just switch the payment rails for your business. We want you to own everything. We're not custodial. We don't want to touch your money. We just want to make it as drop dead simple for you. And also, that's not even the greatest part about our product. So our differentiator from really everybody in the space is not only are we the only fully managed non-custodial Lightning service in the market, but also our differentiator is we will sync to your accounting software. So right now we have a QuickBooks integration, which if you want to purchase some Kratom or anything at the bar back there, they're a Blackspace's customer. Whenever a purchase is made, we automatically sync that Lightning payment to their QuickBooks. Again, we only want to switch your payment rails. Businesses, they're used to their accounting software. They're comfortable with their accounting software. We don't want to take them into the deep end straight with Bitcoin. We want to make it as simple as possible and you to own your money. Down the pipeline, we have, if you use Zero, Sage, in a few months, we're going to be releasing many more integrations or whatever integrations you would like. Again, you can see Derek back there if you're interested, and we have Gabe right there sitting on the couch and Rosa somewhere back there. So please don't hesitate to ask. Oh, there she is. Please don't hesitate to ask questions to us. We're here for everybody, and we want to make sure people are using the best money ever in the best way possible. So Michael's been sitting here the whole time. We haven't like, what's Michael here for? So Michael is the founder of Oshi. Now I'm accepting Bitcoin. I found the right service for my business. What can I do now? How can I get discoverability or incentivize customers to spend in Bitcoin? And that's where Oshi comes in. So Oshi is an application that basically when you're onboarded with one of these companies, they support just about all of them. Once you get connected, you're now on this network of places accepting Bitcoin. So I can send out offers. There's a discoverable map where like I'm in a city such as Tampa, or I'm in Austin, Nashville. Where can I go to spend my Bitcoin? What Oshi does really cool is you can either purchase a coupon or a voucher for either less dollars or for Bitcoin back that goes into your wallet. So not only it gives you an incentivization for your customers to come in, you also get discoverability because people want to spend their Bitcoin. That's why we have these networks. In a lot of these cities, they have these networks, and they want to support businesses that sell their products or service over Bitcoin. And I forgot to switch to their page. Kept it on Blockspace a little longer, but that's okay, I guess. I don't know if we have this figured out. I really wanted Michael to speak, okay.
Phone connected to this.
Yeah, maybe step outside there, maybe. If you go to tampabitdevs.io, I have linked all of these, and I should have added notes. There are notes that are added under it. So if you're interested in any of these services, these all link to their websites that I showed. And like I said, when you go to the website, it'll have a little description of what I talked about and the trade-offs for each. Again, that's tampabitdevs.io. I have a QR code somewhere. Yes, here. So if anybody wants to scan this as well, they'll take you right to the page. Right there. Okay. I think I have a few more minutes for questions. Thank you, everybody. Yes, sir.
You kept referring to something called Lightning. What exactly is that in simplified form?
Yeah, Lightning in one sentence makes Bitcoin really fast and really cheap. Bitcoin gets a lot of slack for being slow or expensive. And instead of scaling it on-chain, like what a lot of other protocols do, blockchains can't scale, so you scale it in layers. Really don't need to know the complexities. That's what these services are for. It enables you to send Bitcoin at the speed of the internet, less than 3 seconds for fractions of a penny. So thinking I could be sending it from me to Fabio right here instantly, or I could send it down to someone in El Salvador in the same amount of time for the same price. it's really like groundbreaking. That's what we mean when we switch to payment rails. I don't want to, I have a low margin business that, I need to pay somebody, but I'm also waiting for a payment. The bank will take days to weeks to settle. How am I supposed to pay someone else? It just creates this waterfall when I can just do it instantly. I can receive a payment and send it out instantly with my own money that I own. I don't need anybody else to tell me what to do with my money. Yeah, Joe.
So how do you manage the fiat to BTC volatility if you're selling goods to the general public? So if I have a B2C component to my business and I want to price some of my products to the general public in Satoshis, do you just, how's that, how do you manage the volatility?
Yeah, sure. I mean, it's, what we do, I can speak for what we do at Blockspaces is, we just take the exchange rate right at the price when that QR code is up and ready to pay. Say you send an invoice, so like with our QuickBooks integration, you can send an invoice out to a customer, they get a link. Let's say they don't open it for a week. Bitcoin price, goes up 5%. We will take the price when they open that link. So now, obviously, when it goes in, the volatility of it, that gets into our accounting when Joe comes. Oh wait. Yeah, we hear him.
Go for it, Michael.
Okay, Michael Atwood, everybody.
Let me, are you guys want me on video too? Turn on my video? Or
You're good. And just you want to.
So do you price it in Satoshis or do you price it in fiat?
It's really up to however you want to it can be cumbersome to check the price of Bitcoin and then this is what it's going to be. I want to keep it at this price. So it's a lot better just $30. What is it at this time? And then Joe will be coming up to talk about accounting, tracking cost basis and stuff like that, and strategies for that. Obviously sats are the standard. We want to be able to just price it in sats, but every business is different and everybody runs their business differently. So I don't know where Wes is, where I'm at on time, or I don't know if Michael, you can hear me, but
Michael, you go ahead and talk.
Hey everyone, can you hear me?
Yep.
All right, awesome. So are we still doing this panel type style bit, or what have we talked about thus far? Or
Tell us about Oshi. Tell us about Oshi.
All right, so I'm Michael Alvin, by the way. Great to be here with you guys remotely. I'll be in Miami next month for the conference. But Oshi effectively is a way to incentivize consumers to pay with Bitcoin and also just introduce consumers to Bitcoin through Bitcoin rewards. So we're creating a global network of local businesses offering Bitcoin rewards to their customers, so that these customers are able to go from maybe not even knowing what Bitcoin is or knowing very, very little about it to actually receiving Bitcoin whenever they buy a coffee or they buy any product or service that your business is offering. You can set a certain amount of Bitcoin rewards to offer them as a form of loyalty or a rewards program, right? Just to keep their interests, again, just to drive loyalty and really to introduce them to Bitcoin in hopes that over time they'll actually be willing to pay with Bitcoin at your business, whether that's through the rewards they've accumulated or because you kind of set them slowly down the rabbit hole, and you can offer additional rewards or discounts if the customer actually pays in Bitcoin, saving you money in processing fees and saving your consumers hopefully a little money as well.
Thanks, Mike. Does anybody have any questions about Oshi or anything? Yeah.
Do the loyalty points, do they have to be in Bitcoin, or is it something that the restaurant specifically sets up for what they want to offer the client?
Do we get that back there?
Do you asking if the points need to be in Bitcoin or?
Yeah.
Or just, yeah.
So the points themselves are Bitcoin denominated in Oshi. So the points are actually sats. So they're Satoshis. Satoshis, there's 100 pennies in $1, there's 100 million in sats like Bitcoin. So these points actually, are denominated in Bitcoin and sats. The customer can, kind of watch the value of that, go up and down, over time, up and to the right. And it's pretty exciting. Instead of giving, coffee points, punch cards, or just various discounts that, are kind of standard part of the course, not that exciting. And, for all intents and purposes, it's kind of just garbage. Starbucks has a very popular rewards loyalty program. They just slashed all their rewards, redemptions by 30%. It's basically another fiat game. So you're able to offer your customers something of actual value. Whether or not all of them believe that Bitcoin is valuable at that moment, you are giving them real value, and I think that's one of the best ways to convey that you really appreciate your customers and you're willing to go a little further in the rewards system.
That make sense?
Yes, thank you.
Yeah, any other questions? I think we've got about 5 more minutes. Questions for myself or Michael?
What's the process like to get onboarded onto Oshi?
So we're rolling out our new version 2, so it's already live in several merchant pilots, but it depends on what you run. So if you have Square or Toast, we have a simple plugin for you. It's effectively just one click, more or less, in terms of being able to give Oshi access to the point of sale, so we can issue these rewards whenever your customer opts into them at the point of sale using Square or Toast. For something like WooCommerce, Shopify, and other e-commerce plugins that we'll be releasing soon, again, it's just a matter of downloading the plugin, setting your rewards amount, and kind of loading up your rewards account as the merchant. And every single time the customer makes a purchase, they'll receive an email with their rewards. So the process is very simple and easy. You don't have to actually be handling any Bitcoin as a business. We handle all that for you. It's more or less just installing the plugin and loading up your balance.
So security, if you're actually going to be, I guess it's like in between the customer and the merchant, how do you deal with security and proprietary information?
You have to repeat that question. I didn't catch it.
You deal with security.
Right, exactly. So there's certain laws where you can't obviously give the information. How are they securing that information during that transaction?
How are you securing the information?
Yeah, so effectively, whenever the customer opts into these programs, Oshi is effectively just doing marketing on your behalf. So in terms of protecting the information, you have an our secure service, basically the Square point of sale or the e-commerce website, basically pinging us saying, hey, this customer just paid, he opted in to receive Bitcoin rewards. Here's their email. So we send them a branded email for your business with their rewards. Yeah. So it works similarly to a variety of other loyalty programs. We're just offering Bitcoin rewards instead with some other bells and whistles.
You have a question?
Just, it does link directly with fiat to Bitcoin, right? When somebody pays in fiat from their bank link, it just rewards them. If we offer them 20,000 sats for doing this transaction, they get paid in Bitcoin from their fiat transaction.
Correct. Yeah. So if I understood the question correctly, the customers can pay with debit or credit card. And there are solutions that are here and presumably upcoming in which you'll be able to accept Bitcoin payments directly through your point of sale. Stripe has something with Clover now where you can do. But ultimately, what we found is, this isn't some field of dreams. If you accept it, they will come sort of thing. I think El Salvador is a really great example of this, where every single business, even if it wasn't explicitly stated that you have to accept Bitcoin, they felt as though they needed to, so they were scrambling to accept Bitcoin. And by and large, very few people actually paid in Bitcoin. They're still not paying in Bitcoin much, aside from the relatively small number of Bitcoin enthusiasts like myself and quite a few people in the room around you now. So I think that showed us one, it's really important just to introduce people to Bitcoin without having to force them to pay with it. So yeah, you can pay with your debit or credit card. You can get Bitcoin rewards seamlessly. There's really no additional step that these customers need to take other than pay as they always do, and they earn something far better than they usually do. And what we hope is that over time, not only will these customers become more familiar with Bitcoin, they'll actually draw those rewards to their own wallet, maybe Cash App, Stripe, or self-custodial wallet like Moon or something, and familiarize themselves with the tools how to pay with Bitcoin. So maybe the next purchase, you can also offer a discount if they actually pay with Bitcoin, an additional discount besides that, right? That'll really kind of help these customers along and influence this behavior, change this behavior of just tapping your card every time to actually using Bitcoin to pay, whether that's something like Stripe or Cash App or what have you.
All right, I think that's all the time we have for onboarding. Again, ask me any questions. Thank you, Michael. Really appreciate it. Sorry for the kinks, but thank you, everybody.
So next, we're going to have Rory from CoinFlip, one of our sponsors. They're going to be talking about the value of Bitcoin, what kind of makes these price moves, like why the heck did it go up 80% and down 20%, and then it's sideways for a year and a half. So he's going to try and elucidate some of that for us.
Thank you. Good morning. Do we need the microphone for recording purposes? Because I speak relatively loud.
Yes.
Yeah.
We do. Okay. All right.
And sorry about the technical issues. We're trying to get creative with the live streams, but we shouldn't have any more of that.
While we're waiting for the presentation to come up, just by way of introduction, I had strategy and technology for a company called CoinFlip. So we are a global, what's called an on-ramp, off-ramp company. Originally founded in Chicago, but we have opened up a large product and engineering organization down here in the Water Street area. Stop on by. We have a crypto experience center open up for consumers. We do a lot of training classes. Happy to have you guys come on in. It's part of our journey and our contribution to this ecosystem of trying to get more and more education out there. Cryptocurrencies are very difficult to understand for most consumers, and so we're working hard along with the rest of the folks in the industry to try to educate, inform, and explain. And that's really what I'm going to do here today. Just by way of hands, how many have a background in crypto before you came to this meeting? Wonderful.
All right.
Are there any power Bitcoin people in here? Live and die with it, maximalists, no other currency in the world, no other digital asset in the world. I'll see you guys in Miami, I'm sure. Okay, so let me just real quick, I'm gonna try to keep this as jargonless as possible. There's a lot of great presentations talking about the technical depth, so I'm gonna avoid that. I want to talk about and try to help you diagnose or dissect why the heck does Bitcoin even have value, and what is its value, and how do you interpret its value, and what moves its value. As everybody knows, since everybody raised their hand, Bitcoin's highly volatile. It's one of the most volatile asset classes in the world. However, it's got one of the best risk-adjusted returns in the world. So it's a strange asset class in that way. It doesn't operate like a security. It doesn't operate like a commodity. It doesn't operate like currency. It doesn't operate like a derivative. It operates so independent of everything else. It's hard to interpret from time to time, which, by the way, is why it's so hard to understand the regulatory aspects of it, because it doesn't operate like anything else. So one of the uniquenesses about digital assets in general is, unlike other asset classes, they are not fixed to a given exchange. So there isn't one exchange where you go buy Bitcoin. In fact, that's not the only place you can buy Bitcoin. You can buy Bitcoin off of an exchange. You can buy it directly from market makers. You can buy it from on-ramp, off-ramp providers, which are called principals. You can buy it peer-to-peer. You can go buy it from your friend. You can go give it as a gift. You can get it just about anywhere. And because of that, there is no definitive pricing source for Bitcoin. The industry uses a concept called spot pricing, which is we take that off of the exchange. And there's two ways to think about pricing Bitcoin. There's the average price, which is where we look across all exchanges, and I'll explain why we use exchanges in a minute. And then there's the volume weighted average price. Okay, these are important distinctions in pricing because as you look up here, you will see, this was as of last night, you'll see Bitcoin pairs from yen to USD to USD equivalents like USDC and USDT. You'll see a variety of different pricing across a variety of different exchanges. And you'll notice that price deviation up there shows the indication of price deviation between what is called the volume weighted average price. Okay, so when you're trying to understand Bitcoin pricing, it is difficult. It is difficult. You can literally buy it 1 second, and depending on where you look, the price is completely different the next second. Okay, which has created a whole new field of algorithmic trading where people are trying to win on the spread across trade destinations. Okay, that's one of the volatility issues we're having in the industry right now is algorithmic traders who are leveraging the spread problem in order to drive some, Satoshi's worth of profit on every trade. So it's a very difficult thing to manage in the industry right now. I will say there are a couple of groups that are working very hard to become the definitive global rate source for cryptocurrency. One is CME Group, and that is through a product offering they have called CF Benchmark. And they have a if you really, really can't sleep and you want to really understand their benchmark, it's about a 30-page white paper of math formulas and weighting calculations. It's a great way to spend a Sunday afternoon. The other one is the NASDAQ. The NASDAQ is trying to establish a rate authority position, largely because they're the destination of exchange-traded funds for Bitcoin, like the Grayscale Fund, right? So they're trying to establish themselves as the definitive source. In the meantime, we have the exchanges. That's where we go to get spot pricing. That is why every time you check Bitcoin pricing, it's different. No matter where you're at, you're going to get a different price. That has made it difficult for Bitcoin to become a tradable security. I can't believe I just said security. Currency, a tradable currency. We don't use the word security. A tradable currency is because of this nature of this volatility. Right? It's something that we in the industry are trying to overcome. There's increasingly market makers that have come into the market to stabilize pricing, but we're not there just yet. As the circulation continues to evolve to more retail consumers, this pricing will begin to sort of stabilize, right? So that's ultimately what we're all after in this industry is a more stable Bitcoin pricing model. Next slide. And by the way, if you have questions, just jump in. I'm just doing this conversational. I'm not going to just kind of PowerPoint you to death. All right. What are the other factors that impact Bitcoin pricing? Well, supply and demand, a big problem right now. There's 19 million plus, everybody's heard this Bitcoin in circulation, of which, roughly half of it's held by the top 10,000 wallets. Right, so there's a supply and demand problem. About 3 million of the 19 million is held by miners, and one wallet steps from miners. Right, so they're locking up Bitcoin, which creates a circulation problem, creates a supply and demand problem, right, which is forcing the Bitcoin pricing up a bit as well. We do think that as miners begin to release their tokens, we will obviously see an improvement in overall circulation. But as of yet, we're not seeing a lot of flow out of their wallets. Okay, so supply and demand. Sentiment. Sentiment is one of the primary causes of volatility in the Bitcoin price. It has to do with how people react to what they're hearing on social media, the next time that the SEC speaks to Congress, people run in and run out, depending on how they're feeling at the moment. There's estimates, there is no definitive source for this, but there's estimate that sentiment weighting is as much as 30% on the overall asset class pricing, right? So 30% of the price decision is weighted to sentiment. That is a very, very difficult thing to normalize when you're trying to build a stable pricing category for Bitcoin. Liquidity is just the availability of it, right? Where do we get it? Where does it come from? And on the retail side of Bitcoin, we're not talking, most people don't buy a Bitcoin or 5 Bitcoin or 10 Bitcoin. Those are institutions. Most people are operating in Satoshis, plenty of liquidity to meet all of the consumer demand. That's not inherently the problem. The problem comes as more and more people get into crypto, of which we believe there will be 1 billion people in crypto over the next 5 years. There's about 400 million globally. We think it's going to be 1 billion. As that begins to increase, we have to solve the liquidity problems in the industry. We're not making, I'm not sure who said it, but remember, we're not making any more Bitcoin. Bitcoin has a clear path, and there is a cap at 21 million. That cap, well, maybe none of us will be over here when it hits that, but the path to that 21 million is there. Yeah.
But those are greatly affected by the 4-year cycle, as the miners will likely release more Bitcoin as the cycle goes up in that 4-year cycle.
Yeah, are you talking about the halving,
Yeah.
the Bitcoin halving? So next March, April-ish, we'll have again, right, which will drop the miners fee, which the rate of inflow of crypto into the miners will be reduced. That's true, the creation of new.
But they may also sell into that strength as the price goes up.
Yeah, that's what we're hoping for, right? There's going to be a lot to see between now and next March, because we're expecting as the miners are getting less for mining, they're going to have to liquidate some of their holdings in order to maintain operations. We already saw a little of that when the Bitcoin price dropped dramatically to 19,000. We saw some miners beginning to exit and dumping their Bitcoin onto the market. So we're hoping that will help solve the liquidity problem as well. Volume, how much is traded every single day? Roughly, it's about 4 billion on any given day of Bitcoin traded across all exchanges. Okay, so volume is a factor. The more the volume goes up, remember, there's a lot of quants involved. There's a lot of technical analysts involved that formulate trades. So they're driving, as volume goes up, they'll drive their quantitative trading associated with that, which creates volatility as well. Yeah.
Do you consider the trading volume to be also the purchases that you want everybody to start circulating? Is that in that calculation?
Buy and sell. Yep, the buy and sell volume. Yeah, for sure. Buy and sell volume is a technical indicator that launches off, trading quants to make trade executions or bots to make trade executions. One of the great things about digital assets is it's programmable, right? It's one of the things that most of us got into it for, because it's controlled ultimately programmatically. The downside of that is it's easy to programmatically make market movements on it. Well, that's the downside. Other questions?
I have one more question.
Yeah.
So in that same vein of theme, circulation and supply and demand and volume, the banks and the credit unions that are starting to onboard the ability to buy Bitcoin, what's your thoughts on that? Because they look at that as pristine capital or collateral.
You're talking about holding it on a balance sheet or making it available for their consumers?
Well, they're making it available, but they're also encouraging to hold it.
Yeah.
Because it's collateral to them.
Right. Today the IRS, I think we spoke about this earlier, the IRS classifies all digital assets as a fixed asset, kind of similar to what you would look at in real estate or anything else. It's got a little bit of weird handling on first in, first out. I'm sure whoever's speaking about taxation will talk about that. But so the buying and selling, when you offer Bitcoin to a consumer through an intermediary like a bank or somebody like us, you're almost always buying through a market maker. So they're leveraging a market maker, not really the exchanges. So the market makers are already holding that. So that's a way to get liquidity into the market, and generally doesn't count against the volumes that we talk about, because we're talking about exchange volumes, right? So the retail customer, the everyday person, looks at pricing, volume, market trends based on exchanges. They're not looking at things like market makers or principal
challenges of, I get Bitcoin through my bank, my merchant wants me to spend it, but my bank's telling me to hold it because it's collateral and hold loan to you or whatever, so it's a little bit of conflict.
Yeah, in the small business side, for people who own Bitcoin on the balance sheet, it oftentimes is used for collateral, right? To do collateralized lending, and so those are effectively locked up, or their assets locked up, so they show up on the balance sheet as an asset. They don't show up under cash or cash equivalents. They may show up as short-term convertibles, but they're not cash. So in that particular case, it's an asset like anything else, so you can't spend it. But there's some strange way you account for it. Intrinsic value to market cap. So we always talk about in asset classes about support and breakthrough pricing. You know, you probably hear a lot about this, that we hit the 30,000 support. We all thought we hit Bitcoin at 30. We thought Bitcoin's new support was going to be 30,000. Today it's 27,000, so it dropped a little bit. But we all thought it was going to be 30,000 when it went back above it. So that also affects pricing, right? There's a bit of psychology around market caps. Market cap values, the support, all of those good things. All of these things affect the price. So one of the questions we often get is, what do we expect the price of Bitcoin to be? I have absolutely no idea.
A lot of Bitcoin is traded OTC.
Right.
How do you think about the impact on over-the-counter trading?
Yeah, so over-the-counter trading, again, generally happens by market makers, so it's a principal involved of some sort, so you're getting liquidity out of liquidity that's probably locked anyway, so you're pulling it into the markets. I consider that a good thing, because it's bringing liquidity into circulation, as long as the person buying it intends to circulate it, as opposed to, say, an order book style exchange, like you may find with a Coinbase or something like that, where it's just buy and sell and pattern matching. You're actually pulling it out of somebody that's holding it. So that's a good thing. OTCs have a place in our financial system or in our digital asset system, right? They're the place where you go and buy when you're not real sure what to do, or you have a very complex buy or sell to do. So that it's definitely an important part of the ecosystem. Other questions? Good? Yeah, go ahead.
Can you speak to the impact of lost keys or lost Satoshis over time? I feel like there's an inherent deflationary cycle or vector that doesn't get spoken about. So if everybody says 21 million, there's not 21 million.
Yeah, that's right. There's 4.5 million that are unrecoverable as of now. There is an expectation that it'll be about 5.5 by the time we hit the 21
Has anybody
million.
projected a rate of deflation?
It's factored in. The problem with, as a function of pricing, well, deflationary wise, it means we're going to end up with less than 20 million in circulation for sure. We're going to end up with something like 16, 17, 18 million in circulation. And just for those that don't understand, is what the question was, is there's a especially early Bitcoin holders have lost their keys, their private keys, so they're gone. They're on the balance. They're on the distributed ledger. You can see them on the blockchain. They just can never be moved or taken off or sold because whoever originally had them had lost their private key. Okay, so they're gone forever. So when we talk about 21 million, it's actually 21 million minus the gone forever tokens, right? So that's what the gentleman's referencing.
But private keys were much more difficult in the early days too.
Private keys are same private keys. We're just much better at managing them now, making them easier for the everyday person to understand them. We can make them a little more secure now. But so back in the day, if you were to set up a Bitcoin mining node, which is how many of us got involved in it originally, you had a private key, and you might have had 5. I think everybody I've ever met in Bitcoin has a story how they lost a Bitcoin because they lost their first key, right? I'm one of them too. So those are gone. They're not recoverable.
We want to do events like this so you don't have to repeat
Right.
our mistakes.
Right. Absolutely. Keep your key, write it down, save it in a lockbox. Don't give it to anybody. But don't ever lose it because there is no way to recover a private key if it's gone. But now with things like seed phrase and all that, we make it a lot easier. Okay, why don't we keep going, just in the spirit of time. So why do people use Bitcoin? We heard today about its competitiveness with fiat, why we dislike fiat. why we like something that's less centralized in its control in terms of monetary policy. But there's a couple different reasons that people will buy Bitcoin. One is, you've heard this before, to hedge against inflation. This was more true historically when Bitcoin would absolutely diverge from a CPI number. Now it's a little bit tighter correlated, but it's still a pretty good hedge against inflation. Compared to US monetary policy, it's less of a hedge against inflation, but in the rest of the world, it's a significant hedge against inflation. Most of the Bitcoin activity being driven out of Latin and South America are a direct result of this. It's to have a stable currency that's available to you that doesn't fluctuate 30-40% on any given day, right? So that's hedge against inflation is more of a global than US thing. Remittance and cross-border transaction, it's estimated 40% of people who buy Bitcoin use it for remittance. So they're buying Bitcoin, sending it to friends and family around the world or whoever. Anonymity and privacy. A lot of people store their value because they perceive it to be anonymous. It is a perception. Bitcoin is not anonymous. It's pseudo-anonymous. But if you have ever off-ramped or on-ramped to a wallet address, we know who you are. We know where all of that went. The really interesting thing about Bitcoin is that because it's UTXO based, I think probably everybody's heard that, there's an actual index value that's associated with every Bitcoin that can be tracked through the entire network. Bitcoin is not anonymous. That is no longer a viable reason to hold Bitcoin. Was at one time, but technology has caught up with it. Most importantly, and with the introduction of Lightning, right, because this wasn't really possible before Lightning, it's become a form of real-time payments. Why wasn't it possible before Lightning? Because the Bitcoin Layer 1 network tries to average the transactions at about 10 minutes, okay? And if you want safety, we go through something called confirmations, which means we want to see a couple blocks get written. But Lightning changed all that. Lightning introduced real-time movement of Bitcoin, which now allows it to be a form of payment. And so now, with some of the vendors you're seeing here, some of the technologies you're seeing, more importantly, what's happening, the most exciting thing happening in the Bitcoin community right now is Lightning. It's really a game changer. For the first time, it looks like Bitcoin could serve as a real-time financial rails. What about these people called speculators that are crazy driving volatility? Well, they are. Speculators drive volatility daily. Like as I said earlier, a lot of the sentiment drives volatility, short-term pricing movements, liquidity problems. Speculators are a big part of the Bitcoin community. They just are. A lot of people got into Bitcoin early to make investment-grade returns, right? Speculators will have to move out as Bitcoin becomes more of a form of payment. And then as that happens, we will see less and less of this volatility. Yeah.
What type of impact would it have if the exchanges themselves become speculators? So they set the price higher or lower at a higher percentage relative to the rest of the market because they're speculating on price itself.
So exchanges, pure exchanges are operating on an order book. They're pairing buyers and sellers, so right? They should not be setting a price in exchange. In fact, I think one of the regulatory actions against Bittrex and potentially against Binance has been the lack of a separation of their clearing function from their trading function. In reality, exchanges should not be setting price. They should be facilitating buy sell, and I think the majority of them do that well, but at least the big ones. The bigger issue are the market makers, which are setting prices, and that will tend to continue to form some level of volatility.
We are having a Q&A session right after this as well.
Perfect. Next slide.
Next slide.
All right, challenges and criticism of Bitcoin. You're probably going to hear this go through a couple presentations today, because depending on the lens you have, the challenges and criticisms are difficult. Scalability, look, that's been a criticism. I'm a firm believer that Lightning has set us on the path to overcome that criticism, right? Once Lightning becomes truly mainstream, and it's pretty close, truly mainstream, this concept of scalability will be overcome. Energy consumption. This one always fascinates me. This is about proof of work, right? And the energy that proof of work is consuming. Most consolidated miners now have moved to some form of renewable energy to power their mining rigs, or what we call wasted energy, which is like burn off of natural gas processing, things like that. Saw an interesting stat the other day. the Bitcoin network consumes less energy globally than the US clothing dryers consume in the same amount of time. So it's almost more of a, look, energy consumption is real, but it's almost an artificially overweighted skepticism of Bitcoin.
You think about the use of that miner that just signed up for the nuclear reactor?
I think it's right. I think it's fascinating. A lot of miners moved out of the U.S. originally because of the political pressure because of this. So the fact that we're starting to see miners come back and sign creative energy deals is a great thing. I think it's phenomenal. There is talk about what do we do about the future of proof of work. A lot of discussion about that on Bitcoin. It almost seems at this particular point not a clear path that could happen, but proof of work is in this case, I think, a good thing for Bitcoin. Regulatory uncertainty, it's there. Digital assets are under regulatory pressure across the board. Now, the Bitcoin has sort of stayed out of the fray of that, at least at significance compared to some of its altcoin or its alt network counterparts, but certainly regulatory uncertainty is a factor in this industry. It just is. We hear positive words coming out of the regulators on this. And look, for those of us that are regulated entities, and you are a regulated entity, we want that regulation clarity. We're not looking for the digital asset world to remain unregulated. We just want it to be smart and clear on how somebody should operate with it. Illicit use, as I said, this is becoming less of a problem, at least no more of a problem than any other form of value, from gift cards to tennis shoes to cash, because we are able to track down people who are party to a scam on the Bitcoin network. Some of you guys may have caught the news that even some of the scams back from 2013, 2014, the FBI have just now uncovered and have recovered the funds of those assets because of the power of the technology that exists today. Limited mainstream adoption, it's early. Like I said, 400 million people in the world of 6.5 billion, 7 billion people. Yeah, we have a long way to go before Bitcoin is truly a dominant form of value across the globe. Its market cap this morning was 535 billion, 546, and depending on which market cap you look at, it's a long way to go before it's significant. And then competition with the other cryptocurrencies. Doesn't seem like there's much debate here about who the prevailing cryptocurrency is. It's clearly Bitcoin, right? But there is a lot of great things happening in the rest of the digital asset community especially around programmable type of derivative products, not product derivatives, but derivative products. Next slide. Okay. See how much time we have left.
If you want, we can just get started with like the general Q&A, so we can all have all the previous talkers up.
Yeah, let's do it.
We can just do that since it's Q&A next anyway. So,
Okay. All right.
Ben, Fabio, want to hop back up, talk about, so if any questions you could ask, any general questions, just feel free to let us know.
We'll just pass around this microphone.
Yeah.
Does that work?
Everybody's got anything?
Any questions? Any area you guys want to dive into?
I have a question on, if you could explain a little more the OTC versus Coinbase. Like, you hear some big whales buying Bitcoin through other means. Maybe you could explain that a little more?
Yeah, there's a couple of different places to buy Bitcoin, to buy or sell Bitcoin. So off the exchange, which is order book, like you would expect on any securities exchange. where you're placing a sell order or a buy order, and then the exchange is trying to match it to a buyer or a seller. So that's one place. And it only accounts for about 30% of the movement today. So I think it's 50 billion of value held up in exchanges today. The other one is through what we call market makers, which are institutions that hold or have access, real-time access to Bitcoin. And these are where the majority of what we call trade desks or order desks would source their liquidity from. So an order desk is a place for you to buy and sell. And then when they buy or when the order desk buys or sells it through you, they're getting it from some institutional grade market maker, depending on who they are. At least for Bitcoin. Altcoins operate a little bit differently because we have something called decentralized or automated market makers, but like DeFi protocols, but certainly in Bitcoin, the majority of OTC desks will operate from their network of market makers.
And like Coinbase is one of those institutions.
Coinbase has a business, not the exchange, but Coinbase institution or Coinbase enterprise has a business where they also offer that up to order desks. And they also have an order desk as well, but that's separate from their exchange. Coinbase has 30 businesses, right? But the exchange is independent.
I like the term you used, alt networks. So I'm pretty familiar with Ethereum network tokenization. I see the potential of ordinals and what's going on with inscribing information on Satoshis. Do you have any idea of how quickly or how far we are from actually implementing that on like a retail or institutional level?
Are you talking about for Bitcoin specifically or the alt
for
networks?
Bitcoin. No, I'm aware of the alt network movement, but I do see inscribing on a Satoshi is going to be much more secure than some of these alt networks that are being ran on Amazon Web Services.
Right.
I think Ben's made it illegal.
Yeah,
Let him speak to it.
Yeah, I think to go in like the design differences of it, but what's really cool about ordinals and barring like spamming the chain and it's one of those things like, oh, I wish we had covenants. It seems like it's the answer for everything, but that goes down another rabbit hole. But by inscribing this Satoshi, and what he means by inscribing is you can create a special Bitcoin transaction that you could just push data to the chain. So you create a really like a large transaction as far as a footprint in the block, and you can stuff any arbitrary data into that, whether it be an MP3, a video, a PDF, what a lot of people, what the speculators are using it for, and the degens is JPEGs. I think as in your question was institutional retail adoption, I think there's like a really cool opportunity for like legal documents, something where you need immutability, where in a court, if a court allows it, or if it's valid in a court, we could have legal contracts or a car title. I can take the Satoshi, the car title to me, and I can sign it to another person. I think there's like a really cool use case there where it's just like stuffing data. Again, you get the Bitcoin maxis, the argument of like spamming the chain. This is money, it's not data storage. And I have a lot of other stuff that like pros and cons to it. But at the end of the day, if you're like super anti-ordinals and no one can do this, there's a lot of people that like at their node level are like rejecting these transactions. This is, as Fabio said earlier, this is censorship resistant money. Like anybody can use it. You're losing the plot if you just disrespect it in that way. There's a lot of arguments. I go back and forth with it, but I think there's institutionally, there are some use cases for it that it could be adopted, and we are going to see. It's inevitable. We're cat's out of the bag on that one.
So we've actually got a live chat question.
Oh, nice.
Yeah, so
So we had Newbie OG in the chat. He's got two questions. One about the Lightning Networks, probably for you, Ben. He doesn't see it viable for retail payments today. How long will we need to get scalability to be ready? Does adoption need to come first? Like, do we need to have the consumers there in order to actually have the scale of network required for this? And then also, 94% of Bitcoin is held in 2% of wallets. Should this be a concern?
Sure, I'll answer the first one. I'll let Fabio take the second one. Lightning Network. There's two things it needs, and one is like an adoption side being in liquidity. So liquidity is just the amount of Bitcoin that's locked into the network. So it's about 3,000 Bitcoin in comparison to how much Bitcoin exists. It's not a lot. So you don't have a lot of you don't have the size. So if I'm a large institution, I'm not going to be able to settle millions of dollars, turning over and over. So it just needs to be a steady growth of people adopting the Lightning Network and bringing more liquidity into it to have more reliable paths. Talking about channels, it's the natural growth of the network. Now, on the technical side, there's a lot of stuff that is being actively worked on. Such as splicing, being able to add to a channel. And I understand this is out of scope for a lot of people, but these are the problems that are being solved right now. Another thing, offline payments. So to be on the Lightning Network, it has to be running 24/7. This is a server. If my server is down, I can't receive my Lightning payment. Another big thing for adoption is mobile. Not everybody's going to go to Voltage and run a node. They're not going to run a node with block spaces. They're just going to have their phone in their pocket. Again, this is a server that has to be 24/7. And these can be resource intensive for a phone. You don't have a lot. So, kind of my solution that I talk about, for example, phone calls. If you have Signal on your phone or anything that can receive SMS or phone calls, there has to be a process or just like a little guy in your phone that is like listening for these connections so it can wake up your phone. We would need something like that at the operating system level where you have a little lightning worker in your phone that is consistently running. So, hey, I'm receiving a payment. You don't have to go up and sync to the network and just have to hold my phone out just to receive a payment. I should be able to just put a QR code up and be able to receive that payment. So there's a lot of technical stuff that needs to be worked on. I have resources for that if anybody's interested, or with anything Lightning if you've never heard of it. There's a lot of things. It's bootstrapping a network. It takes time, especially the way Bitcoiners do it. We take the hard path, but it's the right path. And then long-winded, sorry if I'm moving. I'll take that.
All good.
So 94% of Bitcoin is in 2% of wallets, according to the OG. Is that a problem?
No, I don't see it as a problem. Like Roy mentioned earlier, the network is not completely anonymous, right? So in many cases, if we dive deeper into that 2% of wallets, you'll notice that maybe not a vast majority of them, but certainly a large chunk of them haven't moved their coins in, probably a decade or even, several years. So, it can be assumed that maybe those are lost, right? Yeah, but also on top of that, many of these large wallets are also the exchanges themselves. So that it makes sense as to why those large wallets are holding a vast majority of coins because they're the liquidity provider for buyers and sellers. And the rest of those wallets, one of the quotes that I like in Bitcoin is, you get Bitcoin at the price you deserve, right? If these people saw Bitcoin, understood it before us, then so be it, right? There's always going to be rich people, right? I don't think there's a concern in terms of people having a large majority of the coins in their wallets, but at the same time, it's an open network. Whether they're going to use it, they're going to sell it someday, or they'll, lose their coins.
I'd like to add something to that as well. Those are very broad stroke hand wave numbers that you get there. So you mentioned, you have $50 billion OTC, and then you have, and that was 30%. So, okay, we have, let's say, hand wave, napkin math, $200 to $250 billion in exchanges. Okay, you can extrapolate that. It might be just one wallet, but, how many users do they have? So extrapolating that, yes, paper Bitcoin, yes, it's not owned by them, but bank run, people take it out. Yeah, it's theirs. That's why we always talk about take your money out. So you're then cutting it down to say 40 to 50%. And then, okay, how many corporate treasuries do we have? How many businesses are holding that then? So they're going to have a larger chunk, with businesses. So I think just looking at those numbers and being like, oh, this is so bad, like this is terrible. Just a small proportion of people hold this. Well, when you start to dig into it more, those answers become clear.
I would just say, with whatever you was mentioning, just maybe look at like all the wallets that own less than 1 Bitcoin, and that could be like a lot more than what they're saying, 2%.
Right. The thing with wallets is you have your addresses. You have no idea. Like you can have like hundreds of addresses in one wallet, so you can't tell they're all in the same wallet. So it's really difficult to tell who's holding what and where.
I also don't know what level that person's at. They might also be using proof of stake versus proof of work. I wonder if they think that having more Bitcoin gives you some type of weight on the I guess, overall
Exactly.
process.
Yeah, that's a perfect.
I just wonder.
Just for a live stream in there, they might be thinking difference between proof of stake and proof of work. Someone with 100,000 Bitcoin has the same voting power as someone with less than 1 Bitcoin, which is a great point. Thank you.
Yeah, their only competitive advantage in holding lots of coins would be to manipulate some sort of fiat exchange rate, which we don't necessarily care as we look to the future because fiat's in the past.
So as it pertains to adoption to the mainstream, not institutional sovereign, as it pertains to feet on the street, everyday people, there's many, so I'm trying to kind of tunnel this down. What is the single biggest barrier to adoption for people walking the street? Is it theoretical, understanding money? Is it technical? What do you think is the
Yeah, I'll make mine one sentence and then I'll pass it. Bitcoin has a marketing problem.
Bitcoin has a complexity problem. It's too difficult to understand or unnecessarily too difficult to understand for most mainstream people.
From the theoretical, I came into it fortunate enough to have technology background and some Austrian economics exposure. My original foray was speculative. Once I fell down the hole, I'm like, oh, wait, I got this all wrong. Right. And then I realized from what I see, and I'm trying to validate this, the barrier is theory. People don't understand money.
Right.
And I don't think people want to understand money because once they really understand it, they realize how bad the situation is.
Yeah, 100%. I think we talk about the future of crypto being those that are yet to come in and will be defined by those yet to come in, not those of us that are in it. And the barrier to getting to 1 billion people is making it simple. We have to find a way to make it elegantly simple.
Doesn't it also, on that last question, doesn't up and to the right naturally force whales to sell minnows? In a sense, the people who hold many will likely sell some.
Talking about taking profits?
Yeah.
Yeah.
Right, and so that'll naturally start falling into the hands of people buying bits, Satoshis, and that gets distributed. It'll go from less hands to more hands in the future.
Right.
Just because of the nature of it.
Yep. That's why you use Bitcoin.
Yeah, first off, you guys are very knowledgeable, so thank you for these together. And I say that to say this next. So NFTs was the last big boom, right? What do you guys are?
Still live stream.
Yeah, for the live. Okay, so again, thanks for being here. You guys are doing great. Secondly, NFTs being the last boom, right? That's the last craze in the last market. What do you guys project being the next one? Would it be play to earn? Would it be privacy tokens? What do you guys have on your minds for that?
Bitcoin.
Yeah, other than that.
I don't know. There's whole markets that have not been undiscovered yet, right? I mean, I think what the question earlier relating to ordinals, I think that's a new cutting edge to Bitcoin that can open the doors up to many different things because outside of mining, I think ordinals is another avenue that can actually link the meat space to the blockchain, which is something that, only up until this point, mining was the only thing that could be able to do that. But yeah, I guess that's why they're called crazes, right? It's something that kind of just comes naturally and it's hard to foresee this early, but I think that's gonna add.
Nothing on chain, financial tools. Financial tools is the next thing. It's all speculation. When you get big players in, all they can do is just buy and hold. You take hash rate, for example. You have hash rate completely decoupled from price. It doesn't make sense. Price is tanking, but hash rate is all-time highs every week. it's because there were no financial tools to carry that price up to that. The signal with Bitcoin is hash rate. Billions and billions and billions of dollars are being put into this. Companies are investing in this, but there's no way to support that. Miners, they go underwater all the time because they have no financial tools. They only hold Bitcoin. They have a lot of debt. They have large credit. They have large credit. So there's no financial tools, and even people that aren't involved in the space. Wall Street, say what you want about them, but that's what takes it there. It's nothing on chain. It's not play to earn. It's not retail. You gotta step in the arena.
I would just say
Well
that
said.
credit products are probably something that's gonna come, but also bringing real world assets on chain is gonna be a big move.
Yeah, I think if you're looking for significant trends, I would agree with that. Tokenization of fixed assets, maybe not so much on Bitcoin networks, but off on the alt networks, tokenization of fixed asset real assets are a big movement. Real estate, fixed assets like boats, cars, could be fixed assets and service or tokenization of services. So that's a big movement. They may come in the form of an NFT because that's a type of token, but not an NFT like a creative asset or a digital right asset.
We've got time for one more question.
Well, yeah, I was going to add to that just briefly. The other big move that I'm seeing is going to be on the energy side. It's going to be hard for kind of retail to catch that wave, but we're going to start seeing huge energy providers, Exxon, Shell, those type of levels of energy providers that are going to get into the mining space significantly because it completely flips their market upside down and gives them the ability to basically run their operation at 100% efficiency. So you'll see on this next wave, once they start to learn that, it's going to be a huge deployment of hash coming to the network, which is ultimately a good thing for our energy grid and our society as a whole. One more question.
I'll kind of piggyback on that. So something I heard that we're going to see water meters that are going to have like miners or something like. How obviously we're far away from it, but how do you see that integrated with everyday appliances? So utilizing the current energy, some advanced energy that we have in our houses, like are we starting to implement that into existing tools that we use every day?
Yeah, absolutely. I don't know the brands
right now.
Yeah, the brands off the top of my head, but I know Wesley here that runs Bitcoin Bank. He does that right now with the heat from this miner. So basically, any type of product or appliance that you use that creates heat can be replaced with a mining machine. So we're gonna see that grow and grow and grow. I think the hardware right now is what's been the challenge behind that. How to make it as small as possible and plug and play. But there's plenty of YouTube videos that you can watch that you can kind of rig it up yourself. But yeah, as we get through, I know a lot of people will talk about it, but it's sometimes it's like the energy renaissance in a way that integrating mining down here in the South, it's probably hard to use a lot of that heat outside of appliances. But I know up north, it's relatively easy to just use the hot air for plants or cycling into your hot tub or pool or even your house. People just spin them up in the basement, let the hot air rise, and they've got free heat in the winter. So we'll start to see more and more of those products come online. When it happens, I'm not exactly sure, but it's definitely coming.
All right, so
No, just around the other side of the energy curve, obviously, is that the other great decentralization that's happening in the world's energy production. So there is a movement to tokenize energy credits, right, that can be exchanged between producers in a decentralized way. Anytime something's decentralized, its governance is going to be a blockchain of some sort. And so tokenizing energy production and exchanging those is a big movement as well.
all right, so thank you to our question guys. It's lunchtime. We've got lunch out that door into the next room. We've got a local Cuban place that brought us some empanadas and Cuban sandwiches. There is a veggie option if we got any of those in the audience. If anyone still has questions, I'll sit up here and keep talking to you. If you don't, start grabbing some food. We just kind of keep the cycle moving.
No, we appreciate it.
Yeah, thanks guys. Appreciate that.
How do we?
Does anyone want to ask a question while we're getting food or?
I've got a question.
Yeah, go. Hit me.
Should I just leave this?
12:30.
Mortgage lenders, is there a specific lender that values having Bitcoin more than others? And if so, when does it actually make sense to feel your holdings to that?
So you're trying to get a mortgage, and you wanna get a loan against that for your Bitcoin. So I'm not sure how mature that market is. I know Unchained Capital does Bitcoin-backed loans. I don't think they have a mortgage product. That is something that like people are like, people need to buy houses. You know, so that is kind of in the works. So
Is there mortgage companies that value it more than others? Like, do you know of any that value it more?
I don't know of any like Bitcoin-focused mortgage companies. I know Fabio just All right, well, hope everyone enjoyed lunch. It's delicious local produce, all purchased with Bitcoin and then paid his employees and suppliers in Bitcoin. So thank you for Ricardo for that. If you see him, he's in the gray UFC hat or red UFC hat. So tell him thanks if you liked it, and if you didn't, then don't say anything.
Be polite.
Yeah. So we're gonna start with our panels section of the event today, and so up here we've got Kevin with Hashroots and Trey, both of our sponsors here. Trey with Unchained Capital. We're gonna be talking about how to hold and use Bitcoin. So Trey, your company is very well known for its collaborative custody model. Businesses are often scared to take their own money into their own hands. Like, how do you guys solve that?
Well, I think the first thing to just keep in mind, and the points we made multiple times today, is that if you're trusting somebody else with your money in the fiat world or in Bitcoin, you don't actually own it. You might have legal title to it, but if something goes wrong, if your counterparty in holding that money goes bankrupt, or there's a bank run, or they lose those funds, in Bitcoin's case, if it's an exchange or something like that, you might not have recourse. And so, Bitcoin is all about self-sovereignty and taking control of your wealth into your own hands. And that's no different for businesses as it is for individuals. What we do at Unchained is help people, whether they be individuals or businesses, hold their own Bitcoin in a way that doesn't have any counterparty risk to us, doesn't have any single points of failure. The stories about people losing large amounts of Bitcoin to a landfill because they threw out their computer and now there's $400 million worth of Bitcoin sitting somewhere in a landfill. That's the type of situation that we want to avoid. We make those tools and support and guidance available to our clients so that they're not in a situation where they could just make one mistake like that and lose a Bitcoin. And then, businesses have other needs other than just securing a treasury. Once you decide you want to hold Bitcoin, you want to secure it in the best possible way. We help our clients do that, but then we also offer some of the financial services that are built around that. And the most relevant for businesses is just the ability to buy and sell Bitcoin, right? To manage the allocation that you have between Bitcoin and dollars. And then we also offer Bitcoin-backed loans. So you can hold Bitcoin on your balance sheet, and then you can collateralize that for US dollar liquidity, get access to that value without having to sell it, without having to incur a taxable event, and be able to kind of leverage some of the value that you have stored there without having to give up the ability to hold that for the long term. And we do that in a really well thought out way that gives visibility into that collateral so that you're not blindly trusting that the counterparty that you're borrowing that those dollars for or from have not rehypothecated it. You can actually see that on chain and hold a cryptographic material as part of a multi-signature quorum for the collateral for that Bitcoin. So that's kind of the overview of exactly what we do and how we help businesses. And it's really important for people in a business context to be able to secure Bitcoin with multiple people involved, with governance structures that make sense for their particular situation and their particular structure within their business. We help advise on those types of things as well.
Great. So one of the things that was brought up a little bit ago was the pseudonymity of Bitcoin. And so you guys are regulated entity. There's obviously personal information you have to capture, for that in order for you to do business with people. So what is kind of like the difference between, with you guys, what is required of a business? Like, what do they have to give you in order to work with you versus what someone, if they're a smaller entity going through peer-to-peer means, not necessarily have to deal with?
We are a regulated financial institution that allows us to provide some of those financial services in a compliant way. That does mean that there's a trade-off there in that we have to collect certain information from our clients. There's an advantage to doing that beyond just the fact that you have access to those services as well. And that is, in this collaborative custody model, the way it works is that we're using native multi-sig functionality. What that means is that there are multiple keys protecting the Bitcoin. There are 3 keys, 2 of which our clients control and 1 that we control. And our key can be used as a backup in case one of those 2 keys that our clients are controlling, something happens to them. But in order to do that in the best possible way, we need to know who our clients are. We need to verify that if we're asked to countersign a transaction to move Bitcoin out of a vault, that it is actually you that is requesting that signature and not some attacker who's gotten a hold of one of your keys or something like that. Right? So there are some benefits there to having a partner that can have a little bit of visibility into what's going on with your Bitcoin to help protect it from any kind of attackers or even any kind of mistakes that might otherwise cause you to lose Bitcoin. Did I answer your question, or is there
Yeah.
You want me to dive a little bit deeper into
Yeah,
something?
we'll have plenty of time to dive into some of this stuff.
Well, one thing that I'll say is that you can buy Bitcoin peer to peer. You can hand your buddy $20 or $100 or maybe $1,000 or something like that. A lot of people have a lot of capital that they want to put into Bitcoin, and to do that in a completely non-KYC manner is actually very difficult. And so, there's a spectrum for sure in terms of people's ability or willingness to have a certain portion of their Bitcoin that is completely free of that KYC. There are various manners and ways that you can do that. But there are also a lot of people who have millions of dollars that they want to be using to buy Bitcoin, and you're not going to meet somebody in the alley with a briefcase of cash and trust that that's going to go well, right? So, yeah.
Right. And for anyone who doesn't know, KYC means know your customer laws. So, when you move over like $10,000 in a bank account, that gets flagged. All your information's on there. So that's a KYC, anti-money laundering stuff. But Kevin, you own a business that operates in Bitcoin without giving away too much of your secrets. Could you talk about we mentioned the tax burden of having to sell Bitcoin in order to get a loan. Instead of selling, you get the loan, you get that liquidity. What are some ways that you in your business have tried to to the best of your ability and within regulations that minimize your burdens?
As far as privacy goes, or
privacy and how do you for example using Bitcoin to cover expenses.
Yep.
So just talk.
Yeah, basically I have a couple businesses. One is a small mining operation I just try to run through and do properly as far as tax reporting. So it's not as privacy minded as my personal Bitcoin kind of journey. So one of the businesses has a bank account, which I do routinely use to pay power bills. The other business is consulting, and that's the one where I'm trying to run that completely without a bank account. It's been extremely difficult. So I think that there's a lot of challenges on the way. Every time you spend the Bitcoin, it's a taxable event. Let's say that I'm mining it as well. That's also an income to me. So you're kind of getting double dinged as you're earning it and then as you're spending it. So you have to employ tools to kind of track that. And that's been one of the most challenging things for me over the last couple of years is just keeping track of everything.
And again, not financial advice. We will be getting into taxes and accounting after this, but just as people who are operating in the space, just the things that we've had to try and do to play within the rules that they give us, trying to also maintain our wealth without getting a 30% haircut here, another haircut over there. So what are some? This is kind of for both of you. I'll start with you right now. What are storage considerations that you need as a business? Because you have your long-term storage, but then you also have to sell some of your coin in order to pay your bills. So again, without giving away too much of your stuff.
So ideally, I have kind of what's called a hot wallet that most of my operating funds stay in. Any overages or anything I don't intend on spending, I'll put it away in cold storage, so it's locked away. That's pretty much.
Could you elaborate on what a hot and cold?
Okay, so hot wallet is, let's say, a software wallet or a phone wallet that's constantly connected to the network,
and you have access day to day to spend that Bitcoin. And then my cold storage, I consider my bank account or my savings account. That's where I lock it away. I send it to a cold storage device. In their case, you'd have it on yours, but they would hold a key to help you, in case you lose your keys.
And you're a much larger entity in this field. So like, what have been when a business comes to you and they're like, "Hey, I'm taking Bitcoin now," or a high net worth individual maybe, what have been the hurdles for them holding their own keys and then also operating, if they do, operating with that money that they have now entrusted with you guys?
Most of our clients are holding Bitcoin as a treasury reserve on their balance sheet, and they want to do that in the best possible way. They want to make sure that there's not a single guy with a single seed phrase or hardware device who can run off with the funds. That there's some level of governance structure that is built both cryptographically within the bounds of the protocol and the way private keys work, and that's where that native multi-signature functionality comes into play. But then above and beyond that, we layer in some approval type workflows that allow people who are not necessarily holding that cryptographic material and securing the actual Bitcoin keys, but allow them to get visibility into what's happening within that vault and have some approval functionality so that they can see what's going on and then provide approval before it even gets to the part where you would be signing a transaction to move funds out of the vault. So a lot of the discussion that I have, with Bitcoin, businesses that are accepting Bitcoin or holding Bitcoin on their balance sheet is around that governance structure. Who should be holding keys? Where should those things be secured in physical space? Who should have access to looking at that vault, seeing the transactions that are happening, managing that approval workflow? How does that fit into the organizational structure that a business might have? So, as I said before, we guide our clients through onboarding, both as an individual and as a business. And a lot of the discussion for businesses is around making sure that they're thinking through those different variables in a personalized way, something that's built specifically for how that business is operating.
Great. So another thing with storage is not only how do you maintain it, but how do you pass it down? Business owners, I see families in here. We have, you guys have kids. I know some people have very creative methods of how they store them. So it's your inheritance protocol, right? Do you guys have? Can you talk a little bit about that and how that helps? To make sure that if something, if I get in a car accident, my sister knows my red book is where my stuff is. Whether or not my friends are going to help her access it is another thing. But God forbid something happens to one of our business owners, and they've been started, we've been supporting them, then now their kids need their stuff. So how does Unchained help with that?
Inheritance planning and how that process works is one of the most common questions that I get when I'm talking to prospective clients or clients who have already taken the step of holding their own keys. It's extremely important, right? Bitcoin is a multi-generational asset. We want to make sure that we can pass it down for multiple generations. And so really thinking through that process is extremely important. We do have something that we call our inheritance protocol. For individuals, the way that this works is that your Bitcoin is secured, again, by multiple keys. Any 2 out of the 3 of those keys are required to move the Bitcoin. And the flip side of that is that one key cannot move the Bitcoin on its own. Right? So Unchained has no ability to unilaterally move those funds. We have to be cooperating with you or with your family in that inheritance scenario in order to do that. So there's 2 sides of this coin. The first is the title side of the Bitcoin. So in terms of the legal structure, this is a question around what does your will say, or what trust structure do you have set up that would, from a legal standpoint, enable your heirs to take possession of that Bitcoin. That's not something that we advise directly on, but our inheritance protocol provides some guidance as to how to think about that, a checklist for the conversations that you might be having with an estate attorney to make sure that you're covering all your bases there. Where we have much more direct influence in terms of that process is around that possession side of that question, which is how do I maintain the ability for my family to actually take control of the Bitcoin once I pass. Bitcoin cannot move without valid cryptographic signatures from the Bitcoin keys. And so it doesn't matter what the legal title says, if those keys are not properly maintained, if you've lost access to them or your family cannot get access to them, they cannot take possession of the Bitcoin. And so we provide our clients with some materials that make that easy for them. It's essentially a packet of information, access to one seed phrase, that would be access to one key, that is in like a tamper-evident bag and a couple of letters that just gives them everything they need to contact us and walk through the process of getting access to that Bitcoin, proving title, all of that kind of thing. And then I'll stop after this, and I've been going a little while. The important point here is that they can get access to it while, if something happens to you, they can't get access to it while you're alive because they only have one key. They can't even see the balance that you are protecting within that multi-signature structure, that vault. You could give this packet of information to an estate attorney that you don't necessarily trust, it's not your family, and they won't be able to tell how much Bitcoin you're actually protecting with that, and they definitely cannot move it because they only have one key. So it preserves that privacy of what you're protecting, but still gives that person, that executor of your will, or that estate attorney, or that family member, the ability to work with us to recover access to the Bitcoin in accordance with the estate plan that you've put in place.
Great, yeah, great answer. Thank you for diving into it. It's very important. It's all maybe not top of my mind since I'm just getting started, but we got some older people, and it's very much top of mind. Especially for people in here, I'm sure if you've been the only Bitcoiner in your family for a while, you've been trying to get your family set up. You've been trying to get them to understand. What has that been like for you, Kevin? Trying to make them understand the longevity of this, the requirements to maintain it, and the importance.
Yeah, it's been tough and it's been a learning process. I can tell you, I'm not a customer of Unchained, but the product or just the hand holding through the cycle, it's incredibly scary when you're responsible for holding your own money. I mean, that's yours. If you lose those keys, guess what? My kids are done. They're not getting anything I've worked so hard for over these years. So that product is very beneficial. Along my journey, I can tell you, it probably would have saved me hundreds of hours of learning and trying to figure out what the hell I'm doing. But our scenario is real small. I'm a small business owner. We got a family, so everybody learns. My kids are a little reluctant to it. They'd rather have some cash, but they don't understand the savings yet. They do stack, and they do a couple of. My daughter knows how to use it. She knows how to recover funds, and then my wife as well. So that's my personal journey has just been at home and teaching my kids and trying to teach them to use it.
Just one other thought that came to mind, right? We're talking about inheritance planning in terms of individuals, but businesses need a succession plan as well. There are businesses that are a single individual, and that's kind of managed in a similar fashion. There are also businesses that are two guys who are partners, and they're cooperating to control Bitcoin. And then there are businesses that are much larger, have more complex governance structures, and people rotate out of those. And so having the ability to secure Bitcoin in your treasury and still be able to plan for the scenario where a particular key holder or somebody who is instrumental in that process of securing a treasury can rotate out of the business without having to risk that person running off with the funds or having access to it after the fact is a really important thing to think through. And that's something that, it's kind of like inheritance planning or succession planning for a business that we help our clients think through as well.
Yeah, good. Thank you for that. That is important, especially as a business owner, or if you look at if you're a bar owner and then you want to take Bitcoin, and most people, a lot of people get started just download Moonwallet on their phone. And okay, yeah, I'll take it. I'm the owner. Why not? But you don't want to have to leave that wallet with your employee. Now they can, because one, they have your phone. But two, they can move that wallet, those funds. So there are solutions been walked through with. I've WebEx and all the other terminals that allow for businesses to accept it.
There's no silver bullet for having to trust somebody with the private keys for your Bitcoin, though, right? Like, you could have a very large business that is securing a very large amount of Bitcoin, but you're not going to have every single person in that business all having to come to consensus when a transaction needs to happen. Like, there has to be a point where you are trusting some small group of people. But the important point is that you think through what that process looks like, and that there's no single point of failure, and that you've got the proper kind of control infrastructure in place above and beyond just the fact that you can actually separate keys from one another and not have a single point of failure in managing that.
And that single point of failure is extremely important, because if you do everything yourself, you have now become the single point of failure. I have lost my own keys because I did everything myself and I was just getting started and just learning, and then I made a mistake. But that is what radical self-responsibility is. With this money, when you are your own bank, there is no I forgot my password. If you make a mistake and you don't have it, if you move that money's moved. I mean, even in a collaborative custody model such as Unchained, you take those two keys and you move your money in the wrong place, you're not going to help them get it back. That's not what this solution offers. So thinking of yourself as a single point of failure as well, it needs to be part of a long-term strategy, because you forget things or you fat finger something. Oh crap, I only sent $800 instead of $80. So like minimizing your points of failure is really like one of the key things to do. And maybe you have like your single signature stack that you just deal with. I'm comfortable with $10,000. I can handle that. But once you start getting into the larger into inheritance and succession planning, you might want to look into either a collaborative custody model with Unchained or with your family. You put seeds geographically dispersed, so it takes a lot of effort to actually move that coin. And when that effort is required, that kind of makes you have to think a bit more about what you're doing. But we're not here to talk about. I'm not here to talk. So we got 5 minutes left. I think we're gonna hop into the Q&A section. So what do you got, Fabio?
I got a question for all three of you, really. Based on your experience, whether it be personal or in your business, Unchained specifically, do you have any recommendations when it comes to perfect being the enemy of good? Because the collaborative custody or just custody of Bitcoin itself, in and of itself, can become as complex as you make it. Do you have any recommendations for people to skate that fine line of complex enough that it's secure versus simple enough that it can get passed down relatively easily?
Yeah, so I'll just say everything has trade-offs. You need to understand what you want to do with your stack. I am not running a business. I'm not managing a large net worth individuals' funds. I value my privacy more than I do having someone hold my hand. So I personally wouldn't be using a collaborative custody model or something like that, because I understand it enough that I can do it myself. But if you're a business owner, your trade-offs are so much different than mine, your considerations are so much different than mine.
Yeah, I completely agree with that. Like I said, I keep my business separate from my personal. Personally, I'm a radical privacy advocate, so my thought process in that arena is completely different. So I'm not going to give up too many secrets. But I think it's important as a business owner, you've got to play by the rules. So you need to incorporate policies and procedures that are easily understandable, that you can pass on to somebody else or have somebody in your corner. If it saves you time, then it might be best to employ another entity to help you manage that.
Yeah, you're absolutely right. There's trade-offs and everything. That complexity can be the enemy of your security. The way that we approach this is that Bitcoin management of Bitcoin private keys can be done in a number of different ways. You could do a 5 of 7 multi-sig, or a 3 of 5, or a 10 of 10. And each one of those has different complexity trade-offs versus security. I think we have found what we think is the sweet spot in 2 of 3 multi-sig, which provides enough security so that you're leveling up in an exponential way from a single key. If you just taking your funds off the exchange into a single key is like a 10x improvement in your security. Then when you want to go another 10x, you go to multi-sig and you do this 2 of 3 model that eliminates that single point of failure. If you start getting more complex, there's more stuff to manage. There can be more friction in actually being able to use your funds, and you start to hit a point of diminishing returns. So we balance all of that and then help our clients manage some of that complexity that is added when you go from a single key to multiple keys by being there to support them as they're coming on board and on into the future.
Yeah, so don't let perfect be the enemy of good. Don't think you have to go into this multi-sig, run your own node, stamp anything in the seal. Like, if you have money on the exchange, just get a hot wallet and take it off. Just start. Just taking those first steps. So we got you, and then we'll get to Andrew.
Oh, quite quick. So, been around for quite a few years here. When it comes down to exchanges, all right, it's obviously that's like evil. You come in, and we always talk about trades not your keys, not your coin. What we found out this past year with FTX blowing up, we found out, guess what? They didn't have the Bitcoin they said they had. What is your view of the future? What does Unchained Capital do? Is there an audit? How do exchanges prove not as much of regulation right now? We got there again where they can barely come out and call Ethereum a security. All right, they'll say Bitcoin's a commodity. Everything else is basically non-registered security. But as a company, what is the proof of reserves for exchanges?
For exchanges,
or for Unchained Capital, for example.
So for us, we don't hold any of our clients' Bitcoin. When you do have the ability to buy Bitcoin with us, and the way that works is you hit the execute button in our platform, you settle that trade with a wire, and we drop the Bitcoin in your vault that you and only you control unilaterally. So we are holding a key alongside of our clients, which puts us in a position to help them recover, puts us in a position to help the family recover, but we're never holding on to your Bitcoin that's in your vault. Our loans product is slightly different in that it's still, the collateral that goes in there is secured also in 2 of 3 multi-sig. And the way that we prove reserves for that Bitcoin, which you are giving up unilateral control over, is that you hold a key alongside of us and another key agent that we work with. And so you can cryptographically verify using your private keys and looking at your own node and looking at the blockchain that the Bitcoin that you put into that collateral vault has not moved, hasn't been commingled with anybody else's funds, hasn't been lent out from underneath you, rehypothecated. You can verify that that's the case. And then because we do it that way, that collateral can stay in your name in terms of the legal title. So you've got some extra legal recourse that's built into that. There's really no better way to do that. Testament to that statement is the fact that we are one of the only Bitcoin-backed lenders left standing after all of this stuff, because everybody else was rehypothecating, was lending out all that collateral, was selling, what was it, $1.5 billion worth of Bitcoin.
Yeah.
FTX was short. The price of Bitcoin fell from 69,000 to 15,000, and FTX was short Bitcoin, and they still went bankrupt, right? So the lesson there is don't ever short Bitcoin.
Right, so we have time for a couple more questions, so we can keep them short and compressed.
Do you see like zero knowledge technology being incorporated into, the business side of your Unchained Capital? Or is that more so on like a retail?
There's a concept of blinded XPubs, which, without getting too technical, allows us to hold a key alongside you without being able to see into that quorum until it comes time to actually spend the Bitcoin. So at that point, we have to know what we are signing because we are signing a transaction alongside you. As long as we're not involved in that transaction, we would not be able to see that. But if you get to that point where we are actually signing a transaction alongside you and having to verify that information anyway, it kind of defeats the purpose of having it to begin with. So I think that's a really cool thing and it's something that we've thought about in the past. But it's probably not high on our list of priorities, given the trade-off that inevitably exists when, as I described it there. I'm very much an advocate of privacy and doing all that kind of thing. And so, again, there are trade-offs in different ways of approaching and holding Bitcoin. And fully agree, like if you want to have a more private stash, probably don't want to use any third party for that. But you also are not going to necessarily want to hold a huge amount of your Bitcoin where you are that single point failure.
All right, well, that's a lot of questions. I'll pump them at once. We do have to move on to the next thing, but we will have a Q&A session with all the panel hosts. So we'll move on next to Ben and Joe Wood with Satoshi Faccioli, and Fabio, I'm sorry, I'll be hosting that with Joe Wood, and then Gabe Higgins of Blockspace to talk about taxes and accounting, the fun stuff. Thank you all.
All right. Well, we're going to get started on our next panel. I know Wes just kind of did an introduction. I'm sitting here with Gabe Higgins from Blockspaces and Joe Wood from Satoshi Faccioli. And I'm going to give you guys the opportunity to start us off, give us a brief explanation of what your business does and I guess some of your experiences in it.
Yeah, thanks. So I'm Joe Wood. I started Satoshi Faccioli about a year ago with really the focus of how do we provide accounting services, support for businesses that are looking to accept Bitcoin or in the Bitcoin space. How do we make that easier? How do we get over some of the hurdles that are inherent in businesses that are used to operating the fiat system, starting to accept Bitcoin and use Bitcoin. So that's really been my focus.
Yeah, and as you may have heard earlier, co-founder of Blockspaces and also the founder of Tampa Bay Bitcoin, which Bitcoin Bay is kind of spawned out of. So appreciate everybody coming to this first workshop event that we're holding for businesses. What Blockspaces does is help businesses onboard and use Bitcoin in a practical way. As Ben described earlier, we do integrations with your legacy accounting system, so you don't have to think about or worry about how to set all that stuff up. It just happens right into your normal workflow, so you don't have to disrupt how you actually do business day to day.
Awesome, thanks. I've got a question for Joe. If a business accepts Bitcoin and ideally, rather than sell it, they use it again to send to another vendor that they operate, how does that look in terms of the accounting and taxing side of things in regards to the volatility, right? Because I know earlier we explained, you can buy it at 27 and 5 minutes later it could be 29. And before you send it, you have this increase that you're dealing with. So what, in your experience, what exactly, are there time limits associated to that, or how exactly does that work in the accounting world?
Yeah, so I guess the big picture answer is anytime you're using Bitcoin, selling it, really selling it or using it for purposes, it's going to be a taxable event. So you can't really get around that. But what you kind of can build into your processes is, you receive Bitcoin as part of your business. It's at a certain price. As long as you have that stuff tracked in your system, maybe you use something like Blockspaces where it flows in naturally. If you have that built in and you have the history of your transactions as far as what you're acquiring that Bitcoin at, you have everything you need to report those taxable events later on. And so when I do choose to pay a vendor with that Bitcoin, I have some optionality there we can dive into, but I will know my basis of the information I need to book that properly.
And Gabe, I've got a question for you, because you have a unique situation where I believe, I don't know personally, but Blockspaces may or may not have Bitcoin within their treasury, but you're also selling a service that provides some sort of accounting software for businesses. So I guess based on your experience, what have been some of those challenges from block spaces internally, and then also, I guess, challenges that some of your customers are facing?
Yeah, it's really how we came up with the solution we did. Our first integration is with QuickBooks, because as a small business, a small company, we use QuickBooks for our accounting. So we wanted to start accepting Bitcoin and Lightning payments to our business. Well, we took that to our accountant, and she's like, no, I'm not gonna sit there on a spreadsheet and track every transaction you guys make. You're gonna have to figure out how this works with QuickBooks. So we said, okay, we're an integration company, that's what we do, so let's eat our own dog food here. So that's what we did. We instituted a way to where your QuickBooks can talk to your Lightning node and just basically replace your bank. Instead of it settling with your bank, it settles with your Lightning node. So you can operate totally autonomously on Bitcoin as a company without having to rely on a financial institution. So that's where we saw the value for ourselves. And yes, we do own Bitcoin in our treasury. So it definitely made our accountant, who's not super savvy on this stuff, she's pretty up to speed now from working with us for a couple of years, but now she doesn't have to think about it. It's all automatically tracked for her.
Awesome. And another question I have, I guess, for Joe related to the accounting. I mean, how is it up to the personal user or the business to, I guess, disclose information, or how do you differentiate the addresses that are being sent and received? Because I know, like what Wes had mentioned earlier when we were talking about, a lot of the funds being held up in certain wallets, right? The wallets consist of, hundreds of addresses, thousands of addresses. How is it up to the business to basically be honest with you about, hey, we sent money from this address to this address? How does that look on the accounting side, and how is it not interpreted as a sale or an actual transaction where it is a taxable event? Because really you're just moving it from your left pocket to your right.
Right. Yeah. Right. I mean, it's really going to be the same as an individual. So as an individual, you have, let's say you're buying from an exchange and you pull it off of that exchange. That's not a taxable event, right? You bought some Bitcoin and you pull it into self-custody. Like, that's not a taxable event. If you are using it to buy services, that becomes a taxable event. There's no overarching mechanism that, the IRS is automatically going to know this was a taxable event and this wasn't, unless that's a sale at exchange, for example. Not to say there aren't chain analysis firms out there that is trying to track that stuff down. How successful they would be, I don't necessarily, I'm not an expert in that area. But for yourself, I think the best way to manage it from, you have an accountant, for example, is, you have all your wallets, like, kind of managed in your QuickBooks or whatever system you're using. And so you say, hey, I had one Bitcoin here, I moved half of it to a new address. And so you can track that versus, hey, I went and I paid a vendor, this was a payment for this purposes. And so you're going to see all of those transactions in your ledger when it's going through, and one of them is going to be basically change from one asset account to another asset account, whereas one's going to be a movement out of your asset account into an expense that you're using to run your business.
And then another aspect that comes with running a business, obviously, is payroll. And I think we saw some companies, especially in the crypto Bitcoin space, that were banking with Silicon Valley Bank just a couple months ago. They had serious issues needing payroll once the banking run was happening. So I guess in relation to that, how does that work from the accounting standpoint on payroll? Is that a taxable event in terms of if you sell coffee at 25K per Bitcoin and it runs up to 30 by the time you pay your employees payroll, is that a taxable event? And what kind of tools are out there for payroll management in Bitcoin thus far?
Yeah, so the payroll mechanism wouldn't really be any different than any other payment that you're making. So whether you're paying a vendor or you're paying your employees, it's still gonna be the same mechanism. You need a certain price that you bought it at, and you have a gain or loss based on that. Where it's not overly complicated is you're probably gonna use a lot of the same, tools that are currently out there today as far as I have a gross amount that I owe somebody, and then you're pulling out taxes, you're pulling out withholdings, like all that still can be done. And then what you have left over is I owe them X amount, right? And generally that would be, US dollars coming from your bank account versus, if they're getting paid in Bitcoin, I'm making a Bitcoin payment there. And so from the employer, yeah, it's going to be a taxable event that you're going to need to have a good system to track. From the employee, though, whenever they receive that Bitcoin, that's going to be the amount that they received as far as US dollars. No inherent tax implications there, except for if they need to convert some of that into fiat, then you potentially have a taxable event. So if I receive Bitcoin from you, it's at 30,000. I end up selling it at 35 because I need to pay my mortgage. 5,000 of that is potentially a taxable event. And so that's one of the things that employees might want to think through is, hey, I want to receive payment in Bitcoin. Maybe I have a certain amount of expenses that I know I'm going to need in fiat every month. And so maybe I take 10 or 20% in Bitcoin, whatever the case is. I don't know, Gabe, if you do this with any of your employees, have a use case there.
Not yet.
Okay.
We're working on it.
And that was gonna be my next question was, how complicated and how, I guess, gray do the waters get when, with the Lightning Network moving as fast as it is? I know there's some products out there, I think we'll talk about one in the next panel, about how, you can start to pay employees daily or hourly or, just with a Lightning stream of money, because that's a whole new concept that the Lightning Network is really taking mainstream is, we're not just streaming music and videos, we're streaming money, which is, adds a whole nother, challenge to accounting events. So do you foresee any type of issues with that, or how are there gonna need to be, products built specifically to track that in terms of taxation and accounting?
Yeah, I mean, nothing overly complicated in that it's still essentially the same function, right? If I'm streaming stats to somebody, like if you look at, value for value podcasting or something like that, like whatever you're receiving, you're sending those stats at, same as someone's working for you. Whatever the US dollar value is at the time that you're receiving those, that's kind of your tax basis as an employee. So I work for somebody for an hour, over the course of that time, I get X amount of sats, like that's how many sats you receive, that's the US dollar value. Where I think it gets into a little bit of gray area, and when you talk about like, transactions every second, like, are you really using a different Bitcoin price for each of those seconds, or do you get to a point where it's a reasonable of like, hey, I'm going to average this out for the day because I'm doing transactions all day? I think there's a reasonableness there where you can just say like, I did 10,000 transactions yesterday. Let's use the average price for the day. Not have to get down to that granularity of like each individual transaction. I need to have that really that close of measurement. There's a kind of a concept in accounting of materiality of like, we don't need to get it 100%, right? As long as it's a materially correct amount, you don't need to go overboard.
And with circumstances to companies holding it on their treasury, are there any strategic, idea, maybe not ideas, but methods to like a wash sale or something like that still exists in the regulatory world today? I know some people have spoken to that. I personally don't understand how any of that works. So if you could explain what that is and why it might be beneficial to individuals as well as companies.
Yeah, so essentially it's just the fact that, we've been talking about every time you spend or sell Bitcoin, it's a taxable event. Generally, we don't like that. You can use it to your benefit sometime. And so the big difference between how Bitcoin is taxed and how something like, a stock transaction, for example, is taxed is, and if you were to buy Tesla stock and sell Tesla stock, you have to wait 30 days before you can buy it back again in order to recognize that potential loss. Whereas Bitcoin, you can do it essentially a second later. So let's say I bought Bitcoin at 60 in January, I sold it in December at 30. I could then go buy it back still at 30 a day later, and I have recognized a $30,000 loss there. Similarly, businesses can do the same thing. So let's say, you're a business, you had some extra cash, you put it in on your balance sheet. At the end of the year, if you have a potential loss there, you can sell it, buy it back right away, not really lose any Bitcoin except for the exchange fees that you gotta pay. And then essentially you've locked in a loss that year they can book against your potential capital gains. MicroStrategy actually did this last year, so it was the first time they sold Bitcoin. And so they ended up actually with more Bitcoin at the end of the transaction, even though they sold some. So it's one of those little loopholes in the tax code right now. I don't know if it gets, thrown out at some point, but as of 2023 right now, you can still do it.
Okay, those are all the questions I had. I'll open the floor up to some Q&A. Wesley.
Yeah, so I just want to follow right up on that. So I bought 4 coins at 15, 30, 60, and then like 45 all the way back down. We're down at 30. Can I choose that 60? I can choose that specific coin to sell?
Yeah, so that's probably another important part to go into. There's a whole bunch of different ways that you can value your basis in Bitcoin. The unique thing about it is because it's treated as property, each individual Bitcoin or Bitcoin purchase that you make can be a unique item. And because you can go back in the blockchain and actually find when you bought those items and track them if you have your records accounted for properly, you can say, this is the Bitcoin I bought at 60,000, this is the one I want to sell. What's really important about that is you can do that, but then you need to know afterwards the Bitcoin that you have remaining, that 60 is no longer part of it, right? So it's now your 15 and your 30 and your 45. And so that's really where the record keeping becomes really important. But if you do have it tracked really well, you can take advantage of that.
What's that called? It's not, you have FICO and there's that specific identification, is that what?
Exactly, yeah, specific identification.
Once you switch to one, you have to stick with that one, is that correct? You switch back and forth.
You don't have to stay with the same method all the time. What's important though is that you don't double count them. And so if I'm using LIFO 1 year and FIFO 1 year, like when I use whatever I use the first method, those Bitcoin are now gone, right? And so my new bucket is whatever's left over.
That's interesting. I didn't know you could switch back and forth. Like I can see how that could get complicated.
Yes, you can.
Question here from Colin.
Yeah, I was curious, have any businesses that, I don't know if there's enough businesses out there that transact at such a high volume, but like, has anyone tried writing off like the minor fees that they pay for transactions? Has that ever been material for?
Asking for a friend, right?
Yeah. Would that be something they could do?
Yeah, absolutely. I mean, essentially, any fees that you're paying, let's just take it outside the Bitcoin world, right? Where let's say you're using credit cards and you're paying 3% fees to process transactions. Like those are fees of your business. It's part of running your business, accepting payments. And so, that 3% gets written off as an expense against any amounts that you made. Similarly, if you're paying fees to move money around, just like you would with your bank, like that's an expense of your business. Hopefully those fees are relatively low. But if you are spending a lot of money on fees or you're doing a bunch of on-chain transactions, like those are the expenses, yeah.
Derek.
Yeah, so what happens if you lose your private keys in a boating accident?
Yes, so it would not mean that you can write that as an expense, first of all. So you can't say I lost $100,000 in Bitcoin in the boat. Yeah, that's all I can really say about it.
Trey.
Do you think that the way that Bitcoin is taxed is holding back its adoption for businesses? Like, if that's changed, or if there's like a de minimis exception in the past, do you think that's gonna have a big impact on the amount of people who actually start accepting Bitcoin in their business? Your thoughts?
Yeah, I think it's definitely a point of friction, right? Additionally, right? It can, on top of everything else that you have to learn. So, that's why I think tools like what we do, for instance, helps alleviate that pain and makes it just automatic, so you don't But it is, we get this question a lot, right? This is a topic of area of interest and concern, right? It's a valid concern. You have to be aware of how you're treating this, because the IRS is aware of how you should be treating this. So you want to be, in compliance.
Yes.
Yeah, Bitcoin's been around for 12, 13 years. Why is the IRS sitting on their hands to say it's very gray with taxing? Why are they sitting on their hands? Are they looking for patterns? Are they why haven't they done anything about it? Just kind of float the idea that they're going to do something.
What do you think is gray?
There's nothing written like you need to account for it this way, I should say. Not that I'm aware of.
I mean, the tax rules are pretty straightforward, at least for the last few years, as far as like putting it in the bucket of property. And so they've said they haven't put a hard rule as far as like how you have to value your cost basis. But essentially they put it in a bucket of like if you bought real estate, for example. And so similarly, if you bought a house, you sold that house, there's an amount that you can deduct there, but like you could have a potential capital gains on a house, right, as property, or a car. If you sold a car for a gain, you have potential taxable gain there. So those rules have been in place for a while. I think where it will be interesting is when they get into like the lightning side and you have high volume frequency transactions, like kind of where they come down there, where you really do get into a lot more like a currency aspect there. But they've been pretty clear for a while as far as like, we look at it as property, and it kind of makes sense from the standpoint of like, Bitcoin hasn't been used as a payment tool historically significantly. It's been held as an investment that people just didn't transact with very much. And so as the use case changes over hopefully the coming years, the IRS could change along with it. But right now, I think that it's pretty straightforward with what they've said so far.
I got a question. With the adoption of Bitcoin in El Salvador as a national currency, I guess what type of changes do you see with that? Because if you buy a yen from the store and exchange it, there's no taxable income or taxable event there.
Yeah.
So in my eyes, as a Bitcoiner, I think Bitcoin's a currency, so I shouldn't be taxed as an asset. So I guess, what is their thought process? I think you just mentioned they're pretty clear on it now, but do you foresee that changing? And if so, what would a change like that take?
Yeah, it will be interesting to see kind of what happens there. I don't know the answer definitively, but I think it's an interesting use case of I have X amount of Bitcoin as a US citizen, right? I go down to El Salvador, maybe I go down for a week, maybe I go down to a year, and I'm spending their local currency. I don't see that being something that is inherently taxable, but I don't know the definitive rule on it. So,
how do tax laws like that change? I mean, is it something that we as Bitcoiners can start, writing letters and using ChatGPT to spin up a whole bunch of letters and send them to Washington D.C., or how does something like that change?
It would have to be a federal regulation that they would accept the currency in the United States. That's a big glass of water.
yeah, it's not just the US, it's the El Salvador side as well, right? So like there has to be some collaboration there. Like El Salvador can say whatever they want, right? But you as a US citizen is still falling under that US jurisdiction. The US is by far the worst as far as if you go to another place and you're not a US resident, still owing tax to the US as a citizen. And so like, that's gonna be a pretty big hurdle to get over. And that most countries, if you go somewhere else, you're working there, like you're not taxed at your local, as a country that you might be a citizen of. The US doesn't have any of that. They say, as long as you're a US citizen, you owe at least a portion of that to us.
Right, but I think the way I view it, right, is if I travel to Europe and I forget to exchange it while I'm there, and I come back with €1,000, if I go up to Wells Fargo and exchange it for dollars, there's no taxable event there. So in my mind, what's the difference?
That's a good question. I don't know the answer to it. But I think it's one of those things we'll have to figure out in the years to come. If not just El Salvador, right, but more and more countries start to do this.
Exactly. Question.
Also, I think that like Coinbase really helped to onboard a lot of people into the space because it made it easy. It was far more complex before that. And as a business owner, it's difficult to make that technological leap into something that is in kind of the Wild West still. And so finding companies that you trust, that have the custodial things figured out, that are regulated and written in, will help onboard businesses. And then I think you get back to Bitcoin having a marketing problem. Is getting that word out and those people getting themselves in front of businesses and that trust, because technology is moving so fast, it's so hard to keep up with, especially for some old school business owners who might have the capital to put this on a balance sheet. If they don't have something they can trust, they're just not gonna do it.
Yeah, I mean, I think just maybe an interesting point as far as custody or self-custody, even on the business side. It's one of those things that have been interesting, in that obviously with the custodial side, it adds potentially a lot more capabilities. You have a big institution, you're able to, make payments for you or whatever. And my thinking of that has changed a little bit over the last year, just in that the fragility of the current banking system seems a lot more suspect than maybe even I as a Bitcoiner thought it was. And so completely leaving that and saying as a company, at least a portion of our funds we want to have in self-custody, so that if something were to happen outside the traditional system, we can still operate, versus I think it would have been a really radical thing to say that, before the things happened with Silicon Valley Bank and everything, saying it's really a radical thing to hold your own funds. I think there's been, at least for a very small portion of people, a mindset change there, and could be something that continues on if we consider having more issues with banks.
I have one more question. Do you know of any products in the space that maybe they are custodial services where if you're not actually taking possession of that Bitcoin as a business, but you're using it, let's say, through IBEX, right? And then you're sending it out. Can IBEX offer to incur that tax burden on behalf of the customer, or does the customer still have to do that accounting?
If you choose to use IBEX, for example, and someone's paying you in Bitcoin and you convert it automatically to fiat, there's no taxable event there.
Right.
So Strike is a classic example. All their transactions through Lightning, it all goes through US dollars, right? Even though you happen to be using Lightning. And so if you're using a payment processor, and you say, hey, I want that to be US dollars, they're doing all that work for you. Obviously there's risks there, but there's no taxable event there, but you also don't end up with Bitcoin. So that's the trade-off.
Right. Understood. Okay. One more.
So when you say taxable event, I can sell Bitcoin for any price. How do you determine the price that you account for?
So you have generally, what do you mean by you can sell Bitcoin for any price?
Doesn't matter if the exchange rate says this, I can sell it for whatever I want to sell it for.
In a peer-to-peer fashion.
Yeah, so, the exchange rate doesn't really matter as far as, what the market says, it's your individual amount, right? So maybe you bought a Bitcoin for 25,000 when it was 20 for whatever reason, right? Your cost basis is 25,000. Conversely, maybe you sold for 29 when the cost basis, or the market was saying 27. So that's going to be an individual situation. What I would caution you there is make sure you have good records of it. Or if you are going to say that your cost basis is X, you should probably have some record of, hey, here's how I spent that amount. If you're going to have, if you're reporting that in your taxes, you might need to support it.
One more.
So, we got 5 minutes. Yeah, you're good. So, as a taxes and accounting guys, you guys see Bitcoin books of companies. What are, for you receiving it as the accountant, what are some of the things that businesses should understand as they're doing their reporting? Like their record keeping?
I think my overarching message is like before you start, have a good process in place. So if that's something like block spaces where you can use and leverage tools, like make sure you have a good setup in place and that you don't want to be doing it, just start doing it for 6 months and then have to go back and say, all right, here's all the records of all the transactions, where are they, put them all together. Same thing for individuals really, like as long as you have the data that you can go back to, you can go and you figure out your cost basis, you can figure out what you received as far as what you should be recording as revenue. But if you try to go back and backtrack and do that, it's gonna be a lot harder. So there's more and more tools getting built out there every day that make that easier. And so, yeah, finding out what the latest and greatest is, leveraging those so that you're not dropping everything into an Excel file from 5 different mobile wallets. Like, you don't want to be in that situation.
Yeah, I had to do that whenever I was doing all my gambling on the altcoins for a while, and just trying to piece it all together from 5 different exchanges, and then learning what short-term capital gains were. It can be very challenging for a business owner who's, especially somewhere like this, where they're getting like $8 at a time, and it just comes in at different price points, different times, like they're using block spaces, that also gets shoved right into their.
Yeah, and maybe just one thing to touch on there, because you mentioned short-term capital gains. I think there's a really nice like benefit of being able to say, hey, I received Bitcoin and I send it right back out, and I'm using this as a tool. And you have very little exchange rate risk there, right? If it's within a week, Bitcoin price is volatile, but not that volatile. But inherently, if you're doing that and that's how you're treating it for a tax basis, you're gonna have a short-term capital gain there versus a long-term capital gains, which essentially means it's your ordinary income rate instead of like a lower 15% for long-term capital gains. So without getting into a ton of the weeds there, any Bitcoin that you hold over a year, you're likely to get taxed at a lower rate there.
Awesome. Well, we appreciate both your time, Gabe and Joe. Thank you so much. I've got Ben Trow coming up for the industry panel. He'll go ahead and introduce everybody.
Yeah, so this is going to be more of an open discussion kind of event, and you guys can do so some of these people can talk a little bit more about working in this space and how their businesses operate.
I'll read some of the live stream questions too.
Oh yeah, wow, we got several questions. But luckily we have a large we have a larger Q&A session at the end. So if you didn't get your questions answered, we can.
I think it's our last one, so we'll get more time on that.
Yeah.
All right. Hey, how are ya? All right. So for our last panel, I believe our last panel for the day.
This is our last panel. Yeah.
We're going to be talking about the Bitcoin industry. So all 4 of us here on stage work in the Bitcoin industry. So I have some questions. First, I'm going to start with Gabe, and then everybody else wants to chime in. You've been a long time Bitcoiner. What's the evolution like of the Bitcoin industry over the years? Do you have, what have you seen? What were the newcomers in the space that you might have not seen coming, or any stories early in the days of the Bitcoin industry?
So that's a big question. So it's funny. Yeah, sorry. I got into Bitcoin in 2012, so over a decade ago, and I thought, people laugh at this, but I honest to God thought I was late to the party, right? I was like, oh man, this thing's already out there. It's already at $10 a Bitcoin, and I missed it. But what I didn't understand is how big of a thing this is, right? And I still think we all have a hard time grasping of the problem that Bitcoin is tackling is a massive global problem, and that is based on money itself, the foundations of what money actually is. So I encourage everybody that is listening now to not think you're too late. You're actually early, as Rory mentioned earlier too. Only maybe a couple 100 million people are actually hold Bitcoin. So I encourage people to stick with it. It takes a little bit of work, a little cognitive work there. I understand that too, which is why I started the Bitcoin meetups, because I got to a point where I had to talk to somebody and get information from a person instead of watching YouTube videos. But a lot has changed, obviously, since then. There was hardly any tools, there was hardly any meetups, there was hardly any groups that you can go to and get help. So that's why, obviously, what we're doing here with Bitcoin Bay is helping be kind of that landing zone, help foster this kind of education and community that can help people.
Awesome. I don't know if you two have any stories, tidbits, or where the industry has gone. If not, we can move forward.
Well, there's a ton of investment right now in Lightning and building out companies that are building on Lightning and enabling payments. So that's one really interesting thing that I'm extremely bullish on. I'm very bullish on Lightning. There's a ton of new communities in meat space that are being built out. There's one that you guys are working on here in Tampa, Bitcoin Park in Nashville, the Commons in Austin,
Atlanta
BitLab, that's right. New to the scene, but rapidly growing. So that's another really cool trend that I've seen. The other one is that I'll mention is in terms of funding Bitcoin businesses, there is a lot more capital available for Bitcoin-focused, Bitcoin-only businesses than there used to be. And there are a lot of venture capital companies that have come onto the scene that focus on Bitcoin and Bitcoin only. That's hugely bullish. A lot of the other things that are out there have gotten a ton of money in the past because they're basically scams and easy exit. And some crypto VCs get to make a boatload of money on basically, being insiders to this unregistered security dumping on retail, which is really shameful. But it's not illegal, and they're at least not yet. So they're able to do that. Meanwhile, Bitcoin companies have kind of been largely ignored because we're actually building something that is sustainable over the long term and actually solves real problems, and it doesn't have that short time to liquidity that some of these other altcoin scams have had.
Yeah, that leads quickly to, are there any exciting examples of money going into Bitcoin companies?
Unchained recently raised $60 million in a Series B, so I'm happy to share that news. That closed last week. Yeah,
Congratulations.
It's a really tough market, so we've been fortunate enough to do that. I think we're going to see a lot more of that as we've seen over the last year. Bitcoin and crypto are very different.
Yeah,
and the market over time starts to realize that and starts to there starts to surface opportunities for large scale capital to come in and fund these types of businesses. Like Unchained, like many others that are really actually providing real value to people and not just fly by night, snake oil scams.
Yeah, and I definitely want to get back to funding in Bitcoin companies and how that has, but I can't forget Colin over here. Colin, hey, how are you?
Doing good, Ben, thanks. So yeah, this is your first time on stage, so if you want to give like a quick short introduction where you are in the industry, and then I got a question for you. Awesome, thanks. Yeah, hey everyone, name's Colin. I'm actually a software developer at a company called Sonota. Right now based in Columbus, Ohio, but we are tackling the problem of using Bitcoin to pay for energy. So what our company is trying to do is basically sync up the time it takes to send energy, which over the wire is, basically the speed of light, versus how long it takes to get a payment. So with technologies like Bitcoin and Lightning, those two can actually happen at the same time. So that solves a lot of problems for electric companies and power companies who are providing a better service and aren't actually getting paid for quite some time after the fact. And kind of to your question, that's what makes me really excited is that, I think the thing that's going to kind of kick off this next wave that was mentioned earlier, what's going to kick that off? I think it's just companies that are continuing to build tools to make it easier for people and other companies to use Bitcoin. When Bitcoin was first started, you basically had to be a cryptography expert in order to use it. And people built tools, they built things that helped people get into the space and made it easier to understand, easier to use. And I think that's like what companies like everyone up here is doing, is building that next set of tools that will hopefully let business owners get into the space and solve a lot of those problems that they're currently facing with Bitcoin and money in general.
Yeah, that's fantastic. I was going to ask you, you led into what my question was going to be is, we're here at a business workshop and talking more from, buying goods or selling services, but the Bitcoin industry encompasses a lot more, with custody and with connecting energy. It's super interesting. I have to ask a developer question because we got a developer sandwich up here. And how does open source software, when you think like an industry, you think just the business of making money. And Bitcoin comes from a very open source mindset. How does, maybe Bitcoin's different from every other industry, but where does open source tie into this?
Yeah, so for people who aren't as aware of the code as some developers might be, Bitcoin is actually an open source software. What that means is it's a specific kind where anyone can use it and they can use it for whatever they want to use it for. At first you might be like, well, doesn't that mean if someone else uses it, I'm not making money and I put in all this work? And that may be true, but there are so many benefits to sharing software. Like the Lightning Network is also an open source tool. And so if the people who developed that didn't make that open source, then there would not be this network where now, people can send instant Bitcoin transactions and, Sonota probably wouldn't exist. So that's one, a good reason for it. But two is it helps grow the pie for everybody. So because everyone can plug into Bitcoin, can plug into the Lightning Network, we heard earlier that there's only so much liquidity in Lightning. If that was closed source and only certain individuals could join and it was a permission network, then other people would not be able to bring their businesses onto the Lightning Network. They would not be able to find customers who are utilizing the Lightning Network. And so because it's open source and everyone can share it, it just grows the pot for everybody. It's beautiful.
Yeah, most definitely. I mean, you said everything that I would want to say. It's just coming from a developer perspective, you learn so much. It's not too often that I can see a PhD level computer scientist and see their work and see it in action. Take the code to my own computer and try to run it and break it, as well as bringing community. So at Bitcoin Bay, we have Bit Devs every month, and kind of my style of Bit Devs that I started was a community project. With being open source, we're building a Lightning wallet with Nostro because we're filling all the buzzwords of Bitcoin right now. But it makes it very attractive for other developers to come in and get help, get experience working with the software where you wouldn't get that. I can't go to Twitter and hack on Twitter a little bit. It's like, you have to go to customer support for a feature request and maybe gets to someone. It's the shared knowledge. It's like a giant brain working together and solving problems, finding problems. We're dealing with money here. You don't want to lose money. If I find a bug in software that I'm using that could potentially lose money, I want to be able to fix that right away and give it to the community.
Can I just add something on the open source nature of Bitcoin, Nostra, and that kind of thing is that because it's open source, you can just permissionlessly access the entire network. You don't have to ask for permission for that. And when you join Bitcoin, you can use that entire global network to your advantage instead of having some kind of small relegated network like a Venmo or a Cash App or a PayPal where you're stuck inside that walled garden. If Venmo decides to integrate Bitcoin into its payment system, it now all of a sudden has access to pay any Bitcoin wallet on the planet or receive money from any Bitcoin wallet on the planet. And those network effects really build upon itself. So that's, really, it's just really important to recognize that those network effects are what allow Bitcoin to grow exponentially, whereas Venmo can't do that because they control everything.
Yeah, closed network. It's I guess.
Well, I had a comment to Trey's point there. Is that because of that interoperability, you brought up Venmo, but ironically now since Cash App is integrated with Bitcoin and Venmo is too, somebody on Venmo can actually send money to somebody on Cash App using the Bitcoin feature rather than in the past you couldn't send money to each other.
Have they integrated that on the Venmo side? So I know Cash App, I think you can send, you can send to a Bitcoin payment. I thought within Venmo, you could buy Bitcoin IOUs and sell Bitcoin IOUs, but that's it's all it's ever going to be.
Maybe not yet, but yes.
But to your point, right? If Venmo does integrate that way, they now have the ability to be interoperable with all of the Cash App users. So, I don't know how they're thinking about that. There's a lot of benefit to doing that because now all of a sudden your network is that much bigger. But maybe they see the other side of that and they're like, oh, well, we can't capture whatever transaction fees are associated with that if we do this. So, there's some trade-off there that they're thinking through, I imagine.
Yeah, and to go back to the funding in Bitcoin, obviously Unchained just went through a raise, Blockspace is raising and has gone through raises. Why it seems like Bitcoin, it seems like there's an infinite supply of money on all the altcoins or shitcoins. Why has Bitcoin, which it seems like it's changing with venture capitalists such as 1031, TDP, Lightning Ventures, they're starting to come up now, but why has it always been with, the global, the dominant cryptocurrency? Why has it kind of been left in the dust all these years?
Yeah, I think that's a great question. I think Trey pointed on the reasons earlier, right? There's a bunch of money grab happening right now that is mostly unscrupulous, as we've seen. So it's been kind of sucking the liquidity from the market. But I think we're starting to see where, with all the events that are happening on the geopolitical level now, namely in the financial industry, especially our banking institutions, the value of Bitcoin is being rediscovered and re-engaged, which is great. And I think, VCs are always looking for, the next big wave, the next big returns. So I think it makes perfect sense, of course, that they would be looking to what is potentially going to be the dominant global payment network, and how businesses that are leveraging that or building on that or supplying infrastructure to that are going to be able to capture that value as it expands.
I'll just expand on my previous comments and I'll hand it to Colin. building on Bitcoin is hard, takes a long time, and especially if you're actually trying to build something of value. Copying code and changing one variable and then throwing a dog logo on top of it and then selling it as if it's some kind of revolutionary thing is very quick and easy and allows VCs with a lot of money to play into a narrative, to market it, to get an inside cut, and to get very short time to liquidity. And if you don't understand Bitcoin, it's really hard to know where to invest your money. But you don't need to understand doggy coin or NFT, whatever. You just need to know that you're going to get cut up front, and that as soon as that project launches, you can dump it on retail. And this is perfectly legal. So that's why that money has flooded in there, because they're able to recycle it very quickly and at the expense of a lot of other people who don't really know what they're buying.
Yeah, I guess I'll just throw it back to the open source software thing. It takes time for these tools to develop and for the problems that they solve to be realized by a large group of the population. I just think, over the last decade, Bitcoin was the first one there out of all these different kinds of digital assets, and it's still standing. It has survived the test of time so far. And has kind of proven, its positive attributes. And I think that, now as companies like ours are able to raise that kind of money, it proves that that's, it has been able to fulfill its function as a hard money that people can use and rely on. And so now, as more people realize that, more talent, more capital is going to come into the space, and we'll be able to keep building new and better tools for everyone who needs it.
Fantastic. I'm gonna keep the mic on you. I have another question. So Trey mentioned, just changing a variable in some open source software. So there are some like pitfalls of open source, like for making these scams easy. That for those that don't know, that's historic Dogecoin. It's just a fork of Bitcoin and threw a dog on it. People like memes, whatever. But why are there's also been almost not a brain drain, but it's a lot more attractive for developers to use these other protocols. What's holding back developers coming into the Bitcoin space? And and maybe as well, what was your experience coming into the Bitcoin space from any other industry that you worked in as a developer?
Yeah, I think it's probably been a combination of community and opportunity. And so, again, just as Bitcoin came out, like I said, you basically at the start had to be a cryptography expert. So like, there's not a large global community for that. It's a pretty niche group. And so as over time, people have learned, like Trey said earlier, there's all these different groups popping up across the country that can help explain Bitcoin, can help new people get into the space and learn about it and how to use it for their businesses. And so I think that's a big part. And then the opportunity as well. As we see people valuing this, other developers can come into the space and know that it's something that's gonna stick around and last a while. I was in, like AI research before, but that was kind of doing its own up and down thing. And, it has its own waves of, popularity, and then, but I basically saw Bitcoin and I was like, to me, this is more of an opportunity than AI, because, everyone in the world is going to use and need money, and, maybe AI will get to that point, but just that opportunity, that's kind of what brought me into the space. I think a lot of other people too, once they see that, they'll be more comfortable to bring their talent and help build on Bitcoin.
Yeah, and to continue that, coming into the developer world, whether you're a 10x engineer with a lot of experience or a junior coming in, Bitcoin's intimidating. As a developer, you go to an Austin BitDevs and you have these guys that are just gigabrains and they're going down rabbit holes that you don't even understand the words they're saying. So it can be very intimidating. But I think what's bringing a lot more engineers into the space is Lightning, and it's been one of the most important things because it took writing software on Bitcoin before. It was like you had to know Bitcoin script. You have to like really know the deep technicals of it to build a product, other than a wallet. Now there are like software development kits that make it easier, which is bringing in more developers because then they don't need to have the full knowledge of the inner workings or the cryptography. But what Lightning really did was bring in application developers. So you have your guys that just build front ends, and they just have to communicate with the node. It makes it a lot easier to build these applications. Like for example, there's a website, Lightning Roulette. If I'm a developer, I can build a website that has a roulette table, and I can just easily integrate Bitcoin into it, and it brings a lot more people into it. And that's the experience I had, and that's why I started Bay Wallet, is to show, hey, it doesn't have to be so intimidating. There are a lot of like niche details that you have to know just because it's Bitcoin, but it makes it a lot more attractive when it's a lot more approachable. And as well, in Ethereum land or like the smart contract based land, the tooling is a lot better. And I'd like your comment on that as well. Like Bitcoin doesn't have as much tooling for a developer in their tool shed. It's increased drastically over the past few years, but not gonna lie, sometimes I'm a little jealous of the tools that they have.
Yeah, I guess it can be a double-edged sword. I think the phrase "pick the right tool for the job" really comes into play here. And so one of the reasons I actually stayed away from that side of developing was because of the complexity that comes along with it. It can make security a lot more challenging. And so for me, being a developer and kind of understanding the security in the code, I wanted a system that I could trust would be secure, that I knew that if I took the appropriate steps, like it wouldn't be hacked. And I know a lot of those other systems have ways that they say it's secure, but we see different hacks and stuff all the time that can sometimes point the other direction. So it can be nice. You can do cool things, and maybe that's just why it has taken Bitcoin a little while longer to build up, is because it is harder to build these tools in a secure way that can be relied upon, and not just something thrown together quick and easy that looks flashy.
Yeah, I don't mean to like pump any shitcoiners' heads about the tooling. If the underlying tech is terrible, it makes the tools meaningless. So I think we had a question back here.
I was curious, based on your comment around Lightning and the other Ethereum-based tooling, the EVM network is sort of kind of. It seems like Lightning's trying to pick up speed with being more quick in transactions, where the EVM network, depending on your gas, can really be an instantaneous transaction.
Not quite. So two things, a blockchain, you can't scale a blockchain with a blockchain. It has to happen on another layer. Like Lightning is really, you can think of it, it's more of a TCP IP layer. You can't scale a blockchain with blockchain. And as well, Lightning has a defined goal. Bitcoin has a defined goal. There's no defined goal for Ethereum. Am I going to use it as a domain name service? Am I going to use it for storage? Am I going to use it for JPEGs? What am I going to use it for? It's lost. A company with no direction is not going anywhere. So there's a clear defined goal for Lightning and Bitcoin, money. So I think the others are catching up and can't see in the dust. And if you guys have anything to say about that. Okay. Nope. Okay. So I kind of have, yeah.
Do you feel that the fact that Bitcoin and Lightning is truly decentralized, and you talk about like the tooling, and it's difficult to find a community around Bitcoin, and some of these things are popping up, they're individualized communities. I mean, and this kind of ties in with the VC question as well. I mean, if you are a developer and you want to develop on Polygon, there's a Polygon Discord channel, there's a Polygon Telegram, there's a Polygon documentation, there's a Polygon Polygon is very specific, I'm not a Polygon person, I'm just using it as
Sure.
an example. VCs are seeing, this is a specific thing, it's a specific use case, that has a specific customer that potentially has a very specific value proposition and a very specific way that I can take this to market. Bitcoin has none of that because it's truly decentralized, and so decentralization becomes the reason why VCs can't wrap their head around what who's the customer, and so businesses start building things on it, and that's what VCs are going to invest in. What is the business that's building on top of Bitcoin and Lightning, and what is their value proposition to their customer? That's what VCs are going to invest in. They're going to invest in Bitcoin.
Yeah, I mean, with the communities exist, the communities are everywhere. I think what Bitcoin does that's really special, not only having the clear defined goal, I can go to a Polygon or whatever shitcoin community and I can ask a question who says they're interested in it. Like I'm doing this like other thing, who says they're gonna help you. We have a clear defined goal, and another thing that makes Bitcoin special is we get together. I've met so many Bitcoin engineers where it's so much more meaningful to meet them face to face and ask their questions and hear them talk and just sit in on conversations. That's like what really separates Bitcoin apart. I can pick out of a hat the Bitcoin engineers that I've met and have a conversation with them, ask them questions.
I was just gonna add, Bitcoin has a pretty good marketing department. There are a few people vying for head, like CMO, Hillary Clinton. She's really going at it. We have Pocahontas, Elizabeth Warren, the STB risk department. They've done a good job.
That's a kind of a US problem, right? Maybe that's why Bitcoin is easy to be adopted overseas, where there's no trust in the government and no trust in banks, where we so fully trust the government and banks here that the problem's not obvious yet.
And so kind of the final question, I don't know how much time we have left. I guess we can go, whatever. So I kind of have some theoretical Bitcoin industry questions. So in a Bitcoin world, a hyper Bitcoinized world, what is the Bitcoin industry? Or is the Bitcoin industry just become Dow Jones S&P?
It'll become the same as the internet industry, which is that there really isn't one. Every company is interacting with the internet. Every company is built on the internet, uses it, it's integrated into their day-to-day operations. Same will be for Bitcoin. The same way that companies now are integrated with the dollar network. It's money, right? And so as it becomes more globally adopted, as people start to recognize the value of tapping into that network, and then it becomes the money that people are using around the globe. There is no Bitcoin industry, I don't think. That doesn't mean that there won't be, people and companies investing in developing it and on it, but it will just be a normal part of how a company is run.
It becomes TCP/IP.
Yeah, it becomes the underlying framework of how we all transact value online. That's the bottom line, because that's what has been missing from the internet. And it like I said, you don't think of internet companies these days, right? We refer back to the .com bubble, but we don't think about .com anymore because it's just so ubiquitous. So I think that's where Bitcoin needs to get to, and that's what we're striving to get it to, is that point where we're not talking about all these underlying, very detail-oriented discussions on how it works and all the details. Nobody cares about how TCP/IP works, and you don't think about it when you open your browser in your phone or in your computer. That's where Bitcoin needs to live. Where it's just there, it just works, and it's a part of our daily transactability.
Yeah, I completely agree. I just think, when we get to the point where you're just swiping a card and instead of a Visa card, it's just paying Bitcoin, to the company accepting it, and you're, you know, paying for your streaming services without having to think about it, and it's just coming out of your node. Like, I think that's where we're at that point.
So where does mining fit in that? That's how I see it would be the only Bitcoin industry.
It's gonna marry the energy.
So it just becomes the energy industry.
Just like telephony is all TCP/IP now.
So what happens after 2140?
Fees generated. So in one of the earlier panels, the fellow stood up and he said, "What's the next big thing?" And it's painfully simple and obvious. The next big thing is the separation of money from state. It's a $900 trillion marketplace, and that's happening microscopically in Nigeria. It's happening in Venezuela. It's happening in Argentina. But it's happening on such a small scale. So to be a part of the next big thing, buy your Bitcoin. If you're competent, run a node and just be a part of the economy, whether it's buying and selling a Bitcoin, holding the Bitcoin, be a part of that revolution. It's a 1,000-year event. We will look back on this, and it's going to be like when we took the printing press away from the church, when we separated church from state, right? I'm not an anti-church guy, I'm just using those as historical turning points. When we take money out of sovereignty and the abuses that follow, that's the next big event. And that's when it's Satoshi dollar parity. That's the next big event. And you don't have to really do anything radical to be a part of it. Just buy and hold.
I think you're right about the importance of mining and the synergies that mining has with energy producers. I think it's probably the biggest dark horse that Bitcoin has going for it over the next 10 years. I think we're going to look back 10 years from now, we're going to wake up and every single energy producer of any scale is going to have Bitcoin mining integrated into their operations in some way, shape, or form. And you know, the people who are kind of close to this, who work in the industry, who are developing and trying to push Bitcoin adoption, we see that now. But I think the general public has no idea that any of that is going on underneath the surface. So yeah, I think that's like a huge trend to follow over the next 10 years. The specific question about the next scam trend, I think that's going to be AI. It's going to be AI token this or whatever. That's the one we're looking for.
It's actually going to be my question about AI. How do you think it's going to affect your industry overall? You know, I guess because you guys are building, but are you implementing any type of AI? How are you guys working on that?
I don't know what that's going to look like. When the AI figures out what Bitcoin is, we win.
It's good pair programmer. That's all. That's all I have for it.
Yeah, I mean, that's a really good benefit actually, is it can help people build tools faster. So, you know, it's not necessarily something to just be scared of. It's just another tool in the tool shed, and you gotta learn how to use it properly.
I think I have final question. I think we're going to open up just for Q&A for anybody that was on the panel. I'm sure a lot of people have outstanding questions.
So I want to add something to the AI thing that just like crossed my mind, which is that what we're starting to see is AI built on top of other AI and this like auto GPT or whatever, which I've not played around with yet. But you know, Bitcoin is the only money that you can actually integrate with AI in a way that actually works and is scalable. You can't do this with the fiat system where you could, you know, have AI controlling other software to figure out how to solve a problem. I want to solve problem X, go do that. And the AI goes out and it pulls different software and resources together and it pays them in Satoshis in real time and does this coordination. And all you have to do is give it the right prompt. That can't happen in the fiat world, but it can happen with Bitcoin. It can happen on the Lightning Network. So just a cool little thought experiment for y'all.
So final question I have for all three of you. What is your favorite project in Bitcoin right now? And what is the most important project in Bitcoin right now? I will say I'm really keen on privacy preserving innovations on chain and off chain for Bitcoin.
Those are the most exciting to me, and I think the most important. I think we need to up the privacy aspects of Bitcoin.
So that's favorite and most important?
Yeah. Well, I think I think Lightning, scaling Lightning is important. Making Lightning more usable, easier to use, and adopted. Yeah.
Yeah, I guess a scaling Lightning's a big one. That is probably I'll say that's my favorite one right now to think about, because a lot of the people who say Bitcoin can't scale, to millions of people, I think it just takes building the tools on Lightning to kind of show that it is possible. And then as far as most important, I think Fabio brought up paper Bitcoin right at the beginning. I think that there's a lot of debate on how to, best have Bitcoin so that everyone can have sovereign control over their own funds. And I think that question is probably going to continue to be asked for quite some time, because there's definitely, there's trade-offs no matter which way you think about it. There's the convenience aspect, there's the holding it your own, there's not losing your keys. So there's so much that goes into that, luckily we've seen a lot of great evolution, and I think we're going to see improvements to that. But I don't necessarily see that going away anytime soon. So I'd say it's probably most important.
Yeah, I agree. I'm lucky enough to work on what I think is the most important problem in Bitcoin right now, which is making sure that people have the ability to hold their own private keys in a way that actually works for them and their family for multiple generations. And that if we don't solve this problem in a good way over time, if all the Bitcoin is secured on regulated exchanges and they control the keys, then Bitcoin has the potential for a lot of headwinds in terms of being used and fulfilling its mission in the proper way. So it can, there's a lot of co-opting that can happen if that's the case. My favorite kind of application in Bitcoin and that kind of thing is Nostr right now. It's just fun to be playing around in that sandbox and zapping people here and there.
What is Nostr?
Notes and other stuff transmitted over relay.
Yep, you got it.
It is essentially a dumbed down communication protocol that is decentralized in nature, that is open source, and its current applications are kind of recreating some of the social media applications like Twitter over this new protocol. And a lot of the developers of Nostr are Bitcoiners as well, and so they've naturally kind of built Lightning into the functionality there. Kind of from the very beginning, which obviously has a very natural fit, but sometimes these things driven by the right people can get adoption much quicker than if they weren't, right? Like Twitter could implement Zaps or Bitcoin, much more directly into the platform, but they won't do it either because they don't understand it. Elon definitely doesn't understand Bitcoin. So they don't understand it well enough, and or they're worried about regulatory concerns, which I think maybe is a real concern for them there. And I don't know exactly how they're thinking about it, but in doing so, they could be incentivizing their content creators to be zapping each other all over the place, and they've already got this huge network effect. Nostr is coming for them in that regard, although it's extremely early.
Yeah. Man, I so many. Obviously, my favorite and most important project is Bay Wallet. Maybe biased. But no, my actual favorite project is LDK. It's the Lightning Development Kit. So right now, Lightning nodes are kind of packaged together as a server. LDK is a toolkit to build a Lightning wallet. So every enterprise that uses Lightning is going to use LDK, and the Lightning wallet that's going to be in your phone is going to be LDK. You have a separation of concerns. You bring your own keys. So if I want to use my Unchained Vault, as the funding mechanism for a Lightning wallet. You can do that. You can bring your own chain data, data storage, however you want to do it. It really opens up a cornucopia of possibilities with Lightning, and it's super exciting. That's what Bay Wallet is built onto. So that's why I picked it. But the most important project in Bitcoin, in my opinion, and this was a hot button issue in Bitcoin for a while, is covenants. Covenants are super important because Bitcoin, we all say like onboard billions of people and everything. I don't think Bitcoin's ready for that if we don't have a covenant opcode. Opcode being like you can like the code that runs on a Bitcoin transaction. Some examples: if everybody were to open a Lightning channel today, you would not be able to. The blocks would look like ordinals times 10. What they're called channel factories that you can do with covenants. And to take it back, a covenant is basically putting a spending condition on a UTXO. So you receive a UTXO being a Bitcoin transaction, the individual Bitcoins, like a dollar bill. Channel factories being I can send one transaction on chain and then they can be claimed to open these channels. I understand I'm going down the weeds, but let's say Coinbase is getting hit by a meteor and everybody wants to take their money out. Again, ordinals times 10, you're not going to be able to get your transaction out. You need to have congestion control, as it's called, taking all these transactions, batching them together and putting it on chain. So it goes on and on as well. You need covenants for better Lightning channels. There's a lot of things. I think it's one of those things that just the conversation got crazy in Bitcoin when like the real conversations of why we need this and thinking ahead. Another one I think Chummy mints are really cool. Yeah.
I know you didn't ask me, but my favorite project is Bitcoin Bay. Build out the circular economy in our local community, I think is important. And ultimately, I know you mentioned it earlier, where there's pockets of communities all over the world, but eventually, we'll paint the globe orange, right? So
how could you not be bullish on Bitcoin Bay?
Exactly.
Well, I think that's all I had. If you guys have any closing remarks, last words that you want to say, we're going to open up for more Q&A. Anybody out there, if any of the panelists before you have questions for, feel free to ask or just start a discussion. You've been sitting here listening to us up here all day, so maybe start a discussion, keep it Socratic. But if you guys have any closing thoughts.
There's some live feed questions too, if you want to.
Yeah, we'll get to those too.
I guess just thanks everyone for coming out. We're all up here. We're starting businesses to help people like you. So if you have any questions, feel free to ask.
Yeah, thanks for having me. Thanks for coming out and supporting Bitcoin Bay. It's a lot of fun building these types of communities, and really glad I was able to be a part of it. Happy to chat about what Unchained does and that kind of thing in one-on-one. So feel free to track it out.
Once again, thank you everybody for joining us for this first workshop. We hope to do this once every quarter as we continue to build and grow. So if you know another company or another business that you want to invite to a workshop like this, we would greatly appreciate it. And if you want to test Blockspace's QuickBook integration, we will give a free month to all those that are here today or online as well. Just hashtag, you can email me, gabe@blockspaces.com, and just put Bitcoin Bay.
And we'll send out an email so you can remember all of the things that you can. But are you guys good?
Yeah, I think we're good.
All right.
You can kick us off.
Yeah. So just gonna give us quick closing remarks, but thanks for our panel members. Thank you to all of you guys who have stuck with us. I know it's been a long day, and this is some pretty dense stuff. We will be having a Q&A right here in a second. I just want to kind of talk about what we're doing at Bitcoin Bay. That way that can go into the Q&A as well. We also, if you did not drop in your business card to get raffled to win this lovely Bitcoin wine, do so now. You do have to be here to win, so if someone else left and they won, then you get another chance. But really just thank you guys. It's been a long day. It's been spending your Sunday with us. We really do appreciate it. This is just the start of what we're trying to do here. Fabio, Ben, and I, the team, you may have met throughout the day. We've been really building this out over the past year and a half, and this year we've been really excited to take it up a notch. We've got a great group of guys that have really know their stuff and are trying to get some action going. And we're not just a bunch of dudes hanging out on Thursday nights at the bar. It's only every other week, but we do meet weekly. We are here every other week on Thursdays, and then we are at a local restaurant the Thursdays after that, just trying to going around so we can get around people. We're going to keep doing more of these. We're going to do one workshop. We're going to try and do one business workshop every quarter. We're going to be doing next month. We're going to have our first community service event. We're going to be doing those every quarter as well, and then we're going to have a family event. So we're just going to try and have one every, once a month, 1 weekend event a month. And really what we're trying to do here, you've probably heard us mention a couple of times, the circular economy. What the heck does that mean? Circular economy is we got sponsored from our generous sponsors in Bitcoin. We paid our venue in Bitcoin. We paid for our food in Bitcoin. He paid for his costs in Bitcoin. So the circular economy what you do is you don't have to on and off ramp on Coinbase or one of these other services that requires your social security number to deal with, or all the taxes implications of it. You still do your taxes if you are going to be spending it even Bitcoin to Bitcoin, but keeping that in the area. That's why like some services like Strike, for instance, if you send Publix your Bitcoin on Strike, you just lose your Bitcoin. They don't get it. So keeping the coin in our community is going to be extremely important, especially as the time goes on. So to that end, we are going to be trying to file here for our 501c3. We have a lot of education opportunities that we're going to be coming up. We're going to be trying to go after the local middle school, high schoolers, and college students, like after school boot camps, kind of like ACT prep course style things. We do also, since I know this is all probably complicated and it's impossible to soak this all in at once, we do also offer one-on-one consulting at an hourly rate with people of our team to come to you, help you set your wallets up, get a node set up with you. We have access to the equipment for this kind of stuff. So you don't have to source it all yourself. We want this to be the one-stop shop for everyone in Bitcoin in Tampa Bay. And we're not asking you guys to start this with us either. We already have a business network of 12 or more businesses. More came in this weekend, and I didn't even get updated because it's my mom's birthday. But so we're not looking for you guys to spearhead this with us. We're just asking you to join us. We're trying to do the hard work for you, but we do need the community support, and we are going to be there to support you guys. If you own a restaurant or a service industry, our network will be encouraged to use you guys. If you own a restaurant, we will commit to hosting our socials at your venue. It won't be every time, we'll be on a rotation. We already are building our rotation. We have our first 3 for that starting in May. We're going to start our social rotation going around all the businesses around here. If you're a mechanic, we have cabinet refinishers, we have HVAC guys in our network. What we want to do is create this, community. And that requires consumers and producers, such as business owners yourself. So I've been talking enough. You guys have heard us talk enough. I'm sure people still have some more questions. I'll get us started off by just picking a thing out of this, and we'll see who. Oh yes. Also, please, your feedback is highly encouraged. This is our first event. There were some problems. We really do appreciate your guys' patience. So please let us know what you thought of the event, what you didn't like about it. Maybe you're tired of our voices or something like that, and you'd rather us not do this for this long, or whatever we can do to make this more valuable to you and the people that you know. So we really do appreciate that. And without further ado,
feel free to be honest with us.
Yeah. We've got Compass Adjusting and Repairs, Joe Terry. Yay! There we go. Take a bigger one. Thank you for coming. Alrighty, so we will be following up with everyone. We do want to make sure we are a support network. There was a Bitcoin initiative back in 2017 that tried to get launched. People got onboarded and no one used it. All of the conversations we've had have been taxes, accounting, storage, all these problems, but none of that matters if no one actually gives you the coin at your businesses. We will give you our coin. We will come to your businesses. We will be your customers. We're not that big yet, but we are growing very rapidly. So once again, thank you guys, and we're going to open up to general Q&A. And we've been waiting. Mark.
Maybe I missed it earlier, sorry about that, but I know you've been talking about
unscrupulous businesses, you talked about scams we heard, how they're gonna be ubiquitous and everyone uses it, and I'm just wondering at some point, we talked, and I don't wanna bring up Paul in the conversation, but it's the brightness of Bitcoin in the community, but also the dark side is scams, cybersecurity criminals.
Yep.
AI creating, now they're doing, social networking, you can have a 12-year-old go on a dark web and buy the code to basically ransomware your company.
Yep.
For people learning, not only for the individual businesses, like say Unchained, like what's protecting them from their points of failure or being protected from cyber criminals? I'm in for IT consulting in Petersburg. I'm just trying to learn a bit more because so many small, medium businesses, even super small, have basically a couple things that, just cookie cutter protection, but they don't realize how vulnerable they can be. And when it comes to Bitcoin, you can lose everything.
Right.
By one weak point. I'm just trying to see learning more about what security you guys have in place.
Yeah, so we mentioned a couple of multi-sig options. What that means is multi-signature. So if you do get scared because some AI has some dude's copied this is already happening. The voice of your daughter, and they call you like, hey, like I'm in trouble. I need you to send me money right now. But like if your daughter has one of those keys or the geographically dispersed, and then you actually have time to like, instead of panicking and just send it immediately, because you have to now gather your things, and you're like, okay, let me like try calling her back. And like it's tough. I'm not an IT guy. Scams are out there. That is why we are so focused on education and make sure your fundamentals are strong. Cold storage as well. You think that's been mentioned a couple of times. Not having your keys connected to the internet. Is what that means. So with a hardware device or even like an old laptop that you've wiped and restored and don't connect to the internet can be like, you don't have to go out and buy some specially made hardware for this. We do have a couple of hardware devices that we recommend that we use. We don't get compensated for it. I just like them. Like Seed Signer, for instance, is open source hardware and software. You can build it yourself with parts that you get yourself. You don't have to go through them. What that does, that keeps your coin offline. So if your computer gets compromised, somehow, like they can't just sweep your keys off your computer. Like people have put their keys in a poem in Dropbox, and 3 years later, there goes their coins.
Keys are safe, your funds are
Hardware.
Yeah. Sorry.
Hardware.
Yes.
Yeah. So like as long as you're on a computer, there is risk. So it's taking a risk assessment and minimizing your attack surface. So, like with Lightning, I'm not going to hold all my funds on my Lightning node. I'm going to take it offline. We are dealing with money here, but you still got to understand it's the internet. So you want to have an air gap computer directly. Yep. Just having layers, and if you're a business, having protocols for your employees. So yeah, these are important steps to take. It's definitely hard to get a lot of these companies, but hiring a consulting firm, to come in, hey, this is how you find a spear phishing attack, or here's what to look for. If you get an email or a text message saying to go get some gift cards, it's urgent. Make sure it's coming from the person you think it is. So as with everything on the internet, it's always a battle, but taking that risk assessment and minimizing that attack surface.
Also, two-factor authentication. You can do hardware. There are hardware devices for that as well, such as YubiKey. I've never personally used one, but I know people have, and it has stopped them from losing their accounts. You have to, if someone's in your account and doing things, you have to actually physically plug that in and push the button in order to that release whatever it is that's trying to happen. We've got one right here. Very simple. It's just a USB stick.
I worked for my accountant. She was on Coinbase. Bought $10,000 worth of Bitcoin. 3 months later, I convinced her to use software 2FA. I couldn't get her on YubiKey. She's not technical enough. She was using Google Authenticator. Somebody hacked her Google account, tried to move, and couldn't because they couldn't get into Google because she had 2FA. Really simple. Very, very simple.
Yeah, it's got a good low barrier entry to raise the cost of the attack on you. Anyone else? Cool. There's no questions. I find that hard to believe.
I'm gonna say a lot of people, they come here knowing a lot about Bitcoin typically, or when you're in the meetups, these people have a passion for Bitcoin. So if you're dealing with people that have zero clue about Bitcoin except for what they hear on TV or family members, I mean, you guys as business owners, I mean, how are you introducing Bitcoin? It's so complex to these people that have no clue about it, really don't care about it that much.
So I started with what is money?
Well, I can kind of speak to, so one of the projects we have is Bitcoin Bay.farm. So you can go to Bitcoin Bay.farm. We're connecting ranchers, local farmers to purchase a Bitcoin locally.
We haven't talked about the beef initiative.
Yeah, we got a lot going on. How many more hours you guys got? So kind of we take the model of what the beef initiative is doing, and it's really you approach these, say it's a business owner, but in our case at Bitcoin Bay.farm is you ask them about their business, you get comfortable with their business, you build a relationship with them, and what we do is like, hey, we just want to a lot of them they just sell at a farmer's market. So hey, we're getting you on the internet, bringing you more sales. We have people that are interested, and yeah, we take in the Bitcoin, but what would you like? You want the fiat? I'll give you the fiat, but you're gonna deliver it on Thursday, or we encourage you to come deliver it on Thursday, and come listen, maybe ask some questions. Okay, getting a little closer. Okay, maybe I'll take a couple orders this week or 10%, whatever in Bitcoin. Oh, perfect. Download Moon Wallet, set a pin, boom, there you go. A couple weeks go by. Hey, you've got a couple $100 in there. Maybe you should look at doing this, and getting them a hardware wallet as they get more and more, and then the goal eventually is that is them stacking through that. So it's a very slow drip approach. Some people are more keen or pick it up quicker, but it's moving at their pace, learning about them, building a relationship. We don't want to come at them screaming at them orange coin good, fiat bad. That's the wrong approach. So that's the approach we're kind of taking with it, and we want to help them and give them resources any way we can.
Build a layer of trust where they trust our opinions, and we're not just trying to be like what Ben just said is you don't come off as a salesman trying to scam them or trying to just bring them in because number go up, right? It's more so building a relationship with them, and then sometimes they're unresponsive to it. They say whatever, I'm not interested, but at some point, along with pretty much probably everybody in here, you're gonna have some sort of life experience, or for some reason your ears are gonna perk up, and you're gonna wait a second, I should probably dig a little bit deeper into this and figure out what this brand new revolutionary technology really is. And at that point you'll still be there hopefully, and you can help them at that point. But yeah.
So we do actually have some live chat questions, and some of these are actually pretty good, so we'll share them with you guys. Also, right after this, if you want help setting up a wallet, if you haven't gotten started or anything like that, if you have more questions, our team is here. We will personally assist you in getting set up on your first wallet, showing you what it looks like. Some people don't even know what it even looks like. It's just a QR code on your screen. It's an app on your phone. It's not 2015 anymore. So if anyone doesn't interest in that, please find one of us.
Yeah, and that goes for at any time, right? I mean, that's kind of what we're trying to build out here is not just the community, but really the support system. I think Gabe mentioned it on the panel, but basically, Bitcoin doesn't have a 24/7 customer service team, right? So that's what we're trying to build.
Yes.
What if you DM the wrong guy and he scams you? You know what I mean? That's dangerous. That's why you got to build out relationships.
Who we are.
Personally, you shake your hands, and your support system is here locally. Somebody you can actually meet with and shake their hand and understand. When they look you in the eye, they're telling you straight how it is. So not just today, we're always here. So reach out. Whatever.
Yeah, and one of the questions on here was about merchants and privacy. So when you accept Bitcoin, if you know what you're doing, you can then look at that person's entire financial history because of the open nature of the blockchain. If I send you $20 from my account that has one Bitcoin in it, you can see that. And then also, if you as a merchant are only using one address and everyone is sending you that, every time someone sends that, they can see who else is sent to you, and then also their privacy over there. So there are privacy tools called CoinJoin, which essentially are collaborative transactions, where the 5 of us can put our transactions together into one, and then they come back out in 5 different ways. So it just obfuscates that history. So these are more advanced topics that if you come to our meetups, we can certainly help you get into it. But that's just kind of a thing to keep in your mind as you're doing this. How do you protect your customers' data, especially in the worlds of data breaches? And there's a data breach happening every month. It seems like at this point. So minimizing your exposure to your own customers' data is probably pretty important, going future, because if you don't have it, you can't breach it. And if you don't, the less data you breach, the less liability you have, less likely you're going to sue. So, does anyone have any questions on that? So this is how you also get in touch with us. Signal is an encrypted messaging app. This is the group. This is our main group chat. It's where you can ask your questions if you have any. There's no dumb questions. It's quite lively, so I won't be offended if you mute the notifications. Just pop in whenever you got something to say. It's also where we have updates. That's where we're going to do announcements for our meetups. For our socials. Hey, we're going to be over here this week. We're going to be over here this week. We're back over here. It's our topic. If there's something's happening in the world, like the banks are, doing their thing that I'm not legally allowed to talk about because it's actually a felony to talk about those things. Yeah, it's crazy. Yeah. You don't want to be inciting things, even though they're already happening. So that's kind of where we just kind of keep up with stuff. And one of the questions on here was, people are transacting in orders of like 50 grand or more, and they deal with long lead times. So I guess some business owners, Colin got into it earlier about how you might do a service and not get paid for 30 days, like net 30, net 60, net 90. The Bitcoin being slow isn't really slow. If it takes you an hour to move 50 grand and it took you an hour and 37 cents, that's not slow or expensive. The wire fee is $25, $25 in 3 days, 40.
Inflation's everywhere.
Yeah. So they're all. So he was asking kind of about stable coins on here as well. This is a thing where if you were a Silicon Valley bank, like we mentioned earlier, and you were a startup and they went under and you had payroll, you can't move that money unless you've got a safe full of cash or a bunch of Bitcoin. So we've reached the point where we need to hedge against custodial risk. And the way to do that is to, have gold bars in the safe or a bunch of cash or Bitcoin, on your own keys. So it's very important. We've talked about a lot here today, and we can keep talking. That's the nature of this stuff. It just doesn't end. But like Fabio had said earlier, don't let perfect be the enemy of the good. If you haven't gotten started yet, maybe you're just holding on Coinbase. Download Moon Wallet on your phone or Sparrow Wallet on your computer. I like Sparrow. It's open source. It's very feature rich, but you don't have to use nearly any of them in order to make it work. Just download one of these easy to use hot wallets, get your money off the computer or off the exchange and onto something you control. And then, you write down those words, and you stick that in the safe or wherever you keep your most valuable possessions. Put this, because this is your bank account. This is what happens. The seeds are like, I forgot my password. Like, oh no, my computer broke. I need to restore my account. You type those words back into a new wallet. Your funds are there once it gets resynced. So, we can keep going all day. There's, I don't know about you guys, but I'm getting a little tired of hearing my own voice. So unless there's any more questions, we'll wrap it up there and then try and help you guys out if you guys need anything. Thank you guys for coming. And this is our website, bitcoinbay.live. This is where we. Yeah, sorry. We have another 30 minutes here. But you can find us up here. You can find our events at the Bitcoin events. You can schedule some one-on-one time with us. We're also going to link to our bitcoinbay.farm. We're going to have our business directory up there once it's done, so people can find you. And you can find others. So we're just getting started on here, but this is going to be kind of the one-stop shop for all of our information going forward.
Thanks.
Oh wait, one more thing. Yeah. Thank you all for coming again, and everyone have a good rest of your day.
Man, how did you do all that?